This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney. We're looking at inflation. Paul, what is a dozen eggs cost? It's down.
Well, I'm going to go to Ken Fellio, our global technical director. He buys eggs by the gross.
He's looking at this at the bakery business. And the bakery business, the last 12 months, 18 months has been difficult. Justin Wolfers, our first guest this morning, is keeping track of a dozen eggs. Of course, with Wolfers, they're Australian and they're organic.
Yeah, I know.
They're from some meadow outside Melbourne,
Exactly.
It's that kind of thing. They were $8 a dozen, and they're down, disinflation in trend. We'll get the key data at 8:30 this morning, along with retail sales. It's a double barrel for you at 8:30. Michael McKee leading our coverage. Ira Jersey scheduled to be in there as well. Because we have Professor Wolfers with us, we're going to get right to it this morning. We're on Apple CarPlay, Android Play, on YouTube. Subscribe to Bloomberg Podcast. Search Bloomberg Podcast to get Paul. Paul's he's killing it this morning. The look he's got. Awesome. It's good. Well, that was great having French Hill yesterday.
Yes, it was.
Arkansas
Right in
basketball.
studio. That was nice.
Can you see Calipari at Arkansas? I don't see him.
I don't.
I can't associate him with the color red.
I mean, it's unbelievable. So they're going to play. Arkansas is going to play at Kentucky this year.
Well, that'll
How
be
good will that game be?
For your presentation as well. We're in the Interactive Broker Studios, right to it on this big CPI day. Our Bloomberg Business Flash is Lisa Mateo.
You got it. And we have a little movement in futures right now ahead of today's CPI report. Expected to show a slight moderation in price increases. We shall see. It comes out at 8:30 Wall Street time. We'll also get retail sales numbers on top of that. Over to the bond market, the 2-year yield at 4.79%. That's down a basis point. The 10-year yield at 4.42%, and that's down 1 basis point. Checking in with commodities, we have spot gold that's higher at $2,365 an ounce. Brent crude $82 a barrel. WTI crude $77 a barrel. Companies making news. I want to start with Boeing. That is another setback for the company. It's down 1%. The DOJ said it's violated a deferred prosecution agreement. That's related to crashes of 2 737 MAX airplanes. That basically means it exposes the company to possible criminal prosecution. New York Community Bank Corp up 6%. It's agreed to sell about $5 billion of loans to JP Morgan Chase. And yes, another day, so we want to check in with those meme stocks. GameStop, well, shares up about 5% right now. AMC up 2%. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Oh, there it is, the blue button. The Detroit Lions blue button. I didn't see that there, and Paul saved me as well. This is a joy. My book of the summer, my book of the year, they're 180 page, 220 pages of that. What you need this summer, some beach reading, 1,024 pages. What? It's like War and Peace. Yeah. It's a romance. Betsy Stevenson and Justin Wolfers, their book, Principles of Economics. The only equivalency I know is Rick Michigan's textbook up at Columbia. The people from Michigan have made a phenomenal, accessible book on greater economics. Yes, it's got algebra, geometry. There may be even a differential equation on page 878, but Wolfers has done it with a book that's in English that you can actually read. Justin Wolfers, what does your textbook say about inflation and all this gloom that we're dying over inflation right now?
Tom, I love the form in which you asked the question. And we've been talking about inflation now for about 3 years, having not talked about it in 30 years. I went back the other day and I looked at it and I said, if you had learned economics the way I teach it, would you have found the past few years puzzling? And the answer is no. The immaculate disinflation, it left so many people puzzled because they're used to thinking about the Phillips curve and used to thinking about a trade-off between the real economy and inflation. But the other thing is there's not just demand shocks in the world, there's supply shocks. And I think that thinking through that lens would go a long way to helping you understand both the rise in inflation and its more recent fall. A
media type who will remain unnamed, I'm going to say, Paul, tilting towards Fox Nation.
Oh boy.
A media type, Justin Wolfers, put out a tweet yesterday and you pounced on it. You were vicious. And you put up the chart of our real wage growth. Why do so many Americans, why are they miserable if Justin Wolfers has a chart showing that wages are increasing?
Right. So let's get the facts clear, first of all, which is, of course, people are right to be worried that prices have increased. They're up about 20% since the start of the pandemic. But wages are up about 24%. And if you can do subtraction, and it says wages are winning the race and they're winning it by about 4 points, which is good but not great. Now, here's the thing, Tom. For the last 40 years, if you'd said to a macroeconomist, what's going on with the distribution of income, they would have said, well, inequality is increasing because it seems to increase every year. We grow the pie and it doesn't go to those who need it most. But this expansion is the first one in my professional career, and I'd hazard to say yours too, Tom, in which inequality's fallen. And so what we've seen is that wage gains have gone to those who need them most, to working class Americans, to middle class Americans. And the folks who've missed out, well, they're in this wage bracket, the top fifth, that I'd hazard a guess, Tom, you're in and I'm in. And the folks, the chattering classes, the folks who are overrepresented in media, the folks who hang out at the bars and the restaurants and the schools and the playgroups and the local parks that you and I hang out at, they're the ones who aren't doing so well. But the reality is that for most Americans, in fact, real wages are growing quite strongly.
And so, Professor, in terms of inflation, how should our listeners and viewers think about it? Does inflation, do prices go down? Talk to us about disinflation. Do prices go down? Right. Am I going to go into the supermarket and a box of cereal will be lower priced a week from now than maybe today? Does that happen?
It's a great question. So inflation is the rate of change of prices. Yep. So it's how much prices are moving up. And they're moving up at a lower rate, but they're still moving up. So disinflation is when we move from a high rate of change to a low rate of change. The goal is to get to a point where the rate of change of prices is so low as to be barely noticeable. Okay. But still, prices today will be, or prices next year, will almost certainly be higher than prices were before the pandemic. And, what's funny is, of course, is that we all joke about our grandparents who say that they can remember when they went to the movies for a nickel. Right. Movie prices never went back down to a nickel. Coke prices never went back down to a nickel. And the same thing's true right now. So, yes, prices have gone up, but in equal measure, your paycheck has gone up. I think there's an interesting psychological process here, though, which is, I think to most of your listeners, if I said, did you get a pay rise? They'd say yes. And if I said, why? Most people say it's because I did a really good job last year. The boss finally saw me as the productive worker that I am. I know that's the story I tell myself. But the reality is that for most of us, the reason that our paychecks got a bit bigger is not because we earned it, but literally because of an inflation adjustment. And so there's that sense in which inflation takes away, but wages give back. But we blame the Fed, or we blame the government, or we blame these inhuman, broader forces for what inflation takes away, but we internalize the giving back. We think it's due to ourselves rather than broader macro trends.
So should the Federal Reserve be concerned about wage growth here as a source of inflation, or say, hey, you know what, as you were just mentioning, it's a good thing because prices are going up and it helps consumers here?
It's a difficult balancing act. And so what I would recommend to you as a media commentator and to your listeners is we should stop using the word wages, because there's two concepts and they have very different implications. So nominal wages, money wages, how many dollars are in your paycheck is one. And the other is real wages, which is how much you can buy with that paycheck. Yep. So wages compared to the price level. So the Fed, the government, and you and I should all be cheering for real wages to be going up. That's what makes the punters better off. The Fed's worried, though, that if nominal wages go up, that prices will very quickly follow. And that's the thing that the Fed's concerned about.
Justin, every Labor Day, I go in and I read one quick chapter from Samuelson, 1948, which is basically the first modern textbook to codify economics. You quote Benjamin Franklin in your textbook, tell me and I forget, teach me and I remember. Is there too much math thrown at beginning economics students today? Are we overloading them with equations where they lose interest in the principles?
I think it depends which part of economics we're talking about. So if you were talking to PhD students who need to learn the complicated math, who need to be able to code in Python and take very complicated models, of course there needs to be a lot of math. But what I specialize in is the same thing you do, actually, Tom, which is talking to the punters. And Economics 1 is my profession's first chance to get people to fall in love with this beautiful discipline of ours. And I think that our discipline can tell stories, and it shouldn't use math to exclude if it doesn't need to. What does a good journalist do? They tell stories, they bring in the real world, and they show the connection between reality and deeper theories. And exactly the same thing is true for a principles of economics class. And Tom, I want you to come out to Michigan someday and tell my students how you're seeing the world, because that's the economics I want them to learn.
That's the Michigan we should go to. We go to the Ark, have a beverage of our choice. I mean, it sounds good. Justin Wolfers, thank you so much. The textbook is Betsy Stevenson, Justin Wolfers' rave review from here. Speaking of reality, with our news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. It was primary election day in Maryland, West Virginia, and Nebraska. Angela Alsobrooks defeated David Trone 54 to 41% in Maryland's Democratic Senate primary. She'll face former Republican Governor Larry Hogan in November.
You know, we've always been an underdog. They've always counted us out. But every single time, together, we have beaten the odds.
Hogan got 62% of the GOP primary vote. In West Virginia, Republican Governor Jim Justice won the primary for retiring Democrat Joe Manchin's Senate seat with 61.9% of the vote, and a couple of candidates with ties to the January 6th attack on the U.S. Capitol lost their races. Derek Evans, a former West Virginia state representative who served 3 months in prison for taking part in the riot, lost a primary challenge to Republican Congresswoman Carol Miller. Evans took just 37% of the vote to Miller's 63%. Former U.S. Capitol Police Officer Harry Dunn fell short to Maryland State Senator Sarah Elfreth in a crowded Democratic primary for the state's 3rd congressional district. Elfreth got 35%, Dunn's nearly 25%. The Biden administration has told key lawmakers it is sending more than $1 billion in additional arms and ammunition to Israel. It is the first arms shipment to Israel by the Biden administration since it put another arms transfer on hold this month because of a growing offensive in the crowded southern Gaza city of Rafah. White House spokesperson Karine Jean-Pierre.
These are targeted, limited operations, and so far it does not appear to be a major ground operation, and we have been warning about that.
Ukrainian President Volodymyr Zelensky canceled all of his foreign trips over the coming days as his commander-in-chief visited Kharkiv to personally oversee the situation on the front. Russia launched a large-scale assault on the region for the first time since 2022. Global news 24 hours a day and whatever you wanted with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Bailey Lipschultz, David Marino, they report. Bill Gross out there selling volatility on Game Dog. Yep. If it goes up and there's lots of volatility, you sell the options and bring in the premium. I mean, he's paying. I mean, he's buying 10 square feet out there in Newport Beach off that trade.
It's amazing. So Bill Gross, the bond king, out there trading options, writing options, actually.
Writing options.
Year to date, GameStop up 178%. All of that in basically the last 3 days.
What he does, he initiates the trade, brings in the premium, and buys season tickets to the San Francisco 49ers. Good morning, Mr. Gross.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by BNY Mellon Insight, June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. To the markets we go, where futures treading water. This is ahead of today's consumer inflation data. Investors hoping that report, well, it won't undermine the case for interest rate cuts from the Federal Reserve. And there's been a lot of Fed speak about it. You had Chair Jay Powell signal that interest rates will be higher for longer, and you had the Fed's Jeffrey Schmidt, who said that rates could remain high, quote, for some time. Over to the bond market, the 2-year yield at 4.79%. That's down 2 basis points. The 10-year yield at 4.41%. That's down 2 basis points. Companies making some leadership changes. We'll start with OpenAI. Its chief scientist and co-founder, Ilya Sutskever, leaving the company. He'll be replaced by the company's research director. If you remember, he's the one who helped to oust Sam Altman, and that, you know how that ended up. Vanguard, that's where we're going next. It named BlackRock veteran Salim Ramji as its first outsider to become CEO. And finally, Tesla. Reuters reporting the company filed a notice saying it plans to lay off an additional 601 employees in California. In other news, Bloomberg reporting Tesla's board is hired an advisor to help with efforts to woo its retail investors to get approval for Elon Musk's $56 billion pay package. Those shares up about 0.1%. That is your Bloomberg Business Flash. Tom and Paul.
On this great, thank you, Lisa. On this great bull market, Gina Martin Adams will join us.
Yeah.
Paul, has she been dead on?
Yeah.
I mean, it's just scary good.
Yeah, I mean, she's been good. She's been in the market.
In the market, you got to participate.
She focuses on, I think, the right things, which are kind of the fundamentals, earnings, margins, pricing power, those kinds of things that drive earnings, which drive stock prices.
With us later after that 8:30 report. 1.5 hours to go from Michigan and Justin Wolfers, Professor Wolfers with great perspective there, to Paul Donovan in London, iconic at UBS, and of course his work with Oxford University as well. I love the paragraph, Paul, on enough with data dependency. And yet at 8:30 this morning, our central bankers are going to be data dependent. How do we end this addiction?
I don't know, to be honest. I mean, having an economist run the Fed might be a good start. The problem is
can we get the tape on that?
So unreliable.
I
mean, I genuinely think this is a problem, that Powell is not recognizing the structural change in the economy, not recognizing that the data dependency doesn't really work. I mean, yesterday's producer price inflation, classic example of this. Never mind what the April numbers were, they absolutely slashed the March inflation data. It was rising by 0.1%. No, we've got 0.2% deflation all of a sudden. And it's just this idea that we obsess about the latest number, which Powell, really since June 22, the policy errors he made back in June 22, he's been banging on and on about data dependency. So, of course, the markets follow it because the markets are following the Fed. We really need a medium-term strategy, I think, coming out of the Fed to try and wean us off this addiction to the latest inaccurate number.
So, Paul, are you of the camp, I'm trying to read it between the lines here, are you of the camp that says this Fed is already behind the 8 ball? They should have been cutting rates already?
Look, if I was running the Federal Reserve, and clearly I don't have the right accent to do that, I would be looking to cut rates already. Because if you look at the market-based prices, the prices that Fed policy actually influences, that's in disinflation territory. You look at durable goods prices, that's in outright deflation territory. Does Powell seriously think that keeping interest rates higher for longer is going to bring down owners' equivalent rents? Because newsflash, it isn't. It doesn't have any impact on owners' equivalent rent. Certainly not for the downside. It might actually raise it. And that's where we're finding this stickiness in inflation. It's in the made-up prices, the fantasy prices. Now, we saw obviously a big bond market reaction to the last CPI print, the March number, which came in stronger than expected. Why did it come in stronger than expected? Because of rents in Detroit. We can't base an entire country's monetary policy on whether or not the cost of a condominium in Michigan is going up or not.
All right, Paul.
I have never seen Donovan this fired up.
Exactly. We got to get him.
I mean, he looked at Totsman City last night and he was fired up, but not like this.
Not like this. So, Paul, will the Bank of England, will the European Central Bank be leading the world in terms of rate cuts in the next several months?
Well, of course, the Swiss have led the world in terms of
right.
rate
Very
cuts, speaking as somebody working for a Swiss institution. So the FMB has been first, and then the Riksbank has been second. But what's interesting, actually, with all of these central banks, and I think it ultimately, it even applies to the Fed, is that what they are doing is exactly the same thing. They are following inflation lower. So why were the Swiss the first to cut rates? Because there's no inflation in Switzerland. Inflation's down, so the Swiss cut rates. The Riksbank has done the same thing, that as inflation's come down, they've cut rates. Interesting side note, inflation in Switzerland, inflation in Sweden on the harmonized basis, 2.3% year over year. Inflation in the United States on a harmonized basis, 2.4% year over year. So, why is the Riksbank cutting and the Fed not?
What's so interesting?
The Bank of England, the ECB, again, I think they'll follow the inflation numbers down. So, yes, over the course of the next 2 to 3 months, we'll see rate cuts from both of them because the inflation pressures continue to abate.
I would suggest, Paul Donovan, and defer to your wisdom, that even more importantly, when they finally move, they're going to move. I mean, they go 1/8 of a point if they could. But, Paul, they're going to reinstitute Greenspan measured, aren't they, when they come down?
So I think that they're not going to rush. I mean, I would be surprised if we got a huge increase. I think what central banks are trying to do, and we can see this with the Swiss and with the Swedes already, they're trying to keep real inflation-adjusted interest rates more or less stable. They're not looking to cut real rates necessarily. They want to keep them stable. But as inflation is coming down everywhere, including the United States, then the central bank needs to follow that with lower inflation. If a central bank does nothing as inflation is coming down, you're tightening policy, and that isn't desirable. So I think, yes, it's a measured pace of easing. It's following the lead of the trends in inflation, but it would be a good idea if we moved away from the obsession with the latest CPI print and started taking a broader perspective on what's going on with the U.S. inflation story.
So I guess in terms of the U.S. inflation, we've had, over the last 3 or 4 months, some, persistent inflation data here suggesting that maybe inflation is not whipped. How do you think about inflation in the U.S.?
So this is the problem. When you start breaking it down, the inflation that the Fed actually controls, the market prices, the durable goods, that kind of thing, that's continuing to disinflate, or in the case of durable goods prices, deflate. I mean, U.S. durable goods prices have been negative, absolute falling prices for month after month after month now. I mean, this is coming up to 2 years of deflation in that particular sector. And these are the areas that Fed policy actually has an influence over. The fantasy price of owner's equivalent rent, Fed doesn't have much control over that. We know that the market price versus the CPI price for actual rents is also, an unstable relationship. There's some very weird stuff going on with motor insurance, and depends which measure you look at. The producer price measure is a lot more benign than the consumer price measure. So you're getting lots and lots of these issues coming in where you are actually seeing disinflation forces. And the areas where inflation is still being propped up, the Fed's got no control over.
Yeah.
One important point, I think, in the States,
quickly.
Except for rent, almost every sector of the United States has got deflation somewhere. Some part of the States has got falling prices somewhere.
Right.
So, this is not a sticky inflation environment. You're having to cut prices somewhere in the United States.
Hugely valuable. Paul Donovan, iconic at UBS. Look for him out on LinkedIn. Really, really valuable to follow him on LinkedIn with some important notes. He leverages over the intellectual research of all of the Union Bank of Switzerland. Futures up 2 Dow, futures up 3. I haven't even done a data check yet, Paul. The real yield down to 2.08%. Right. Maybe that's getting out front of a benign inflation report.
Yeah, exactly. We'll hear CPI here at 8:30 Wall Street time. We're also going to get retail sales, which is a good reason to touch base with Dana Telsey, Telsey Group, one of the leading retail analysts.
That's a nominal number. That's a top line number. So you take retail sales and you sort of subtract out the inflation. One of the major line items there of 200 retail sales line items is Lisa Mateo's last trip to Costco. We'll talk to her about that and get some perspective as well. Subscribe to Bloomberg Podcasts on YouTube. Trust me, that is my future. From New York City, this is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Not much movement in futures this morning on the CPI Wednesday. We'll head to the bond market. The 2-year yield at 4.79%. That's down 2 basis points. The 10-year yield at 4.41%, and that's down 3 basis points. To earnings we go. We'll start with luxury fashion house Burberry Group. ADR's higher, up 2%, and that's despite reporting a slump in sales. Now, tomorrow we get a look into not-so-luxury retail. Yeah, we're talking about Walmart. Today, the Wall Street Journal actually has a story saying the nation's biggest retailer could lose those bragging rights to Amazon if current sales trends do continue the way they're going. Walmart shares, they're a little change right now. Today, the focus, though, shifts to tech. We have Cisco Systems reporting after the close. Cisco shares right now, they're up about 0.2%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Paul Sweeney and Tom Keene, 1 hour away from important CPI and retail sales report. Please tune into YouTube and Apple CarPlay around that time. You can leave us, but come back for the 8:30 reports. This is a treat for global Wall Street, widely anticipated. Megan Graper joins us now. She's at Barclays. They had to give her a fancier title just to keep her, exactly. Global co-head, debt capital markets, baloney. Megan, I've never seen this in your world. It is price up, yield down, in relative to the full faith and credit. Corporate bonds are priced to perfection. How will chief financial officers react at America's corporations?
Well, I mean, the short answer is they're hitting the market and they're accelerating supply into the first half to take advantage of what is, as you suggest, one of the strongest technical backdrops we've seen. I mean, in the face of the market repricings across most other asset classes, I think credit continues to be surprisingly robust. And that's in large part because we're still pricing in this soft landing scenario. Where that's most evident is in credit spreads. Right. We're about 5 basis points away from the tights that we reached back in 2021. And I think we have to acknowledge, and what we're hearing time and time again from investors, is that it's hard to fight the trend. The type of spread performance we're seeing leaves very little room for error. Right. And yet the vast majority of buy-side players say, this is not just a status quo, but in fact, we're likely to see incremental tightening from here. Both hands on the steering wheel, folks. We're going to do a little bit of mathiness here, a little 4-box dynamics with Megan Graper. Megan, when this breaks on the spread, there's 4 outcomes. Corporate yields go up, full faith and credit yields go up. They split the difference 2 ways, or they both come down. Which of those 4 dynamic opportunities in the spread market will occur? Well, I think we're insulated for the time being, and that's in large part because U.S. Treasuries are as high as they are and are likely to be floored as a function of the deficit that we need to fund going forward. So even if the Fed begins to cut, I think we're going to see elevated underlying yields. And the combination of those two creates inflows. So you're seeing retail rotation into investment grade in particular, but you're also seeing it in high yield. All of that anchored by 5.5% yields on, near post global financial highs on the index. The other piece is income. And what's exacerbating this technical as we move into mid-May is that we're in the midst of the second largest income week for investors, between $24 billion of bonds maturing. So they're returning principal to investors. Right. And there's also $16 billion of coupon interest payments. So you got $40 billion of investable dollars back in the hands of the buy side versus $20 billion of supply this week. I mean, that's basically double the buying power versus the bonds on offer. So I think we're contained here. I think we're range bound. I think spreads continue to trend lower, and all of that underpinned by Treasury yields. Paul, did Megan Graper just say that Microsoft yields will be lower than the yields of the United States of America?
Could be.
I think that's what she said.
It could be. I mean, Megan, you've been doing this for more than 20 years. I mean, you get your undergraduate degree from the Duke University, Public Policy, History, and Film. So what do? You had
to get that.
You go to the bond market. That's what you
go to the bond market.
The kids at Duke did.
You took a degree in film?
I did public policy and documentary film studies. So yes, shout out to Duke University.
She's twisted.
That's what the kids at Duke do. They go from that to the bond market. Megan, Give me a sense of the phone calls you're going to make today to your CFO clients. What's kind of the pitch you're making today about the markets and about the opportunities in the markets?
Look, I think you've got to think about taking chips off the table because we don't know what we don't know. So the second half of the year, I think, presents the potential for any number of landmines to start rearing their head. And so while you have these optimal demand technicals in place, even thinking about your 2025 funding needs and pulling those forward. I mean, acceleration is now the defining force behind the new issue markets and investment grade. And so we're seeing volumes up 40%, but it's not precluding borrowers from achieving negative new issue concessions versus their existing secondaries. And you're seeing oversubscriptions that are pretty eye-popping, particularly in the long end of the curve. So the combination of those factors means, double down, continue to pull funding forward. And I think, avoid the noise that might start to creep in and the rate volatility we're likely to experience as we move into the second half of the year.
Megan, how about investment grade versus high yield? Describe how those two markets are behaving. Are they both as open to new issuance?
They are. I would say it's slightly more robust in investment grade just because there's a preference to sort of, if you think spreads are at the all-time tights, I mean, most investors you talk to don't like spreads here, admittedly so, and yet, are not wanting to fight consensus. So performance has not been uniform. I think single A's and triple B's have rallied fairly evenly. Financials have outperformed industrials, and the long end continues to outperform the belly of the curve. I think from a ratings vantage point, you've seen much more divergence in high yield. So triple C's are lagging double B's and single B's. Here again, it's a flight to quality. So I think there are opportunities to generate alpha, but I also think you need to keep an eye out for idiosyncratic risks, particularly if you're dipping down into high yield.
What about tech? Why don't they issue? I mean, Google announces a transformation of search. I'm just now reading Gene Munster's tweet of the day, which is fabulous. But Megan Graper, come on. You and I, we did M&M theory. We read Fabozzi. It was V. Bodie up at BU as our hero. They're breaking every rule. When does Microsoft get out to 8 or 10% debt on their balance sheet from a present 3%?
I mean, we'd love for them to. I think the market would be starved for that type of supply to hit the market. I think at the end of the day, they're flush with cash. And so picking and choosing their spots. I think if you think there's incremental compression here, you talk to investors, if we're 87, 88 on the index, there's some investors calling for us to move as tight as 70. So maybe the Microsofts of the world are waiting for that type of entry point. There's also the ability to stay in the CP market where liquidity is also ample and to not lock in elevated yields if you think treasuries are coming down over the intermediate term. So there is a willingness to be patient, and the tech sector has been sort of case in point.
Megan, when your sales force makes the phone calls to institutional clients to buy these deals that you're bringing to market, did they get any pushback, or do they just buy everything that comes across the transom these days?
No, I mean, the vast majority of buy-side players, I think, you're continuing to see money pile in. So there's not a choice but to figure out how you deploy that, how you invest that. And I do think at 5.5% on the index, that's still a compelling opportunity set. So the return of income is certainly a factor, even though you're right. I think you sort of hold your nose and buy it because with spreads near the floors, it is a dynamic that we're contending with when we talk to buy-side investors. But even those that are disciplined, you're seeing attrition in order books. So not everybody who shows up at the onset of a deal stays there post pricing. There's so much cash in the system that continues to overwhelm.
Right.
The sharpening of inflows that we're seeing tends to cap spreads. That's true in IG. That's true in high yield. But there's been a notable pickup in ETF and mutual fund inflows. I think last week we topped 4 billion or so. That's the 5th largest inflow in almost a year. So new cash coming in, the return of income, as we're seeing with coupons and maturities, all of that sort of exacerbates the need to buy, sort of whether you like it or not.
Hey, film major, are you watching Ripley on Netflix?
I am. I love it.
Isn't it just to die for? It's like
noir.
It's like actually Dakota Fanning reminds me of Megan.
Oh,
I mean, I can see that, I can see the similarity as well.
I'll take it.
Folks, all I can tell you, and Megan will agree with me, the resolution and the static neo-noir imagery of Ripley is just outstanding.
Got it, okay.
It's for Megan Graper. Go watch Ripley. Megan, thank you so much. Our film major at Barclays as well this morning. They're brilliant on debt. We'll feature Megan Graper today out on Single Best Idea. Red and green on the screen. A big churn here. 45 minutes away from key economic data. With our news in New York, here's Michael Barr.
Thank you very much, Tom, Paul, and Lisa. Secretary of State Blinken just announced a $2 billion arms deal for Ukraine. It's mostly from the package approved last month. It comes as Ukrainian President Volodymyr Zelensky canceled all of his foreign trips over the coming days as his commander-in-chief visited Kharkiv to personally oversee the situation on the front. Russia launched a large-scale assault on the region for the first time since 2022. Speaker Mike Johnson says the House will be moving ahead with a vote on a measure that would force the White House to resume the transfer of certain weapons to Israel. This comes after President Biden last week paused a shipment of 2,000-pound bombs over concerns they'd be used in southern Gaza. However, the Biden administration notified Congress that it will be issuing more than $1 billion in new weapons deals to Israel. Speaker Johnson says, though, that the House will still vote on the Israel security assistance.
We'll have to see what effect that has on the legislation, but I think it's important for us to express again the will of Congress on the matter, and so I don't think we'll be changing what we do in the legislation.
It's not immediately known how soon the latest weapons would be delivered. Days after the release of a scathing report detailing a toxic workplace culture, the head of the FDIC has apologized again and is preparing to face lawmakers on Capitol Hill. Bloomberg's Amy Morris reports from Washington.
The report details a culture of widespread sexual harassment and discrimination at the FDIC. Chairman Martin Grunberg is vowing to overhaul the agency's culture and is resisting calls to step down. He's scheduled to appear before the House Financial Services Committee today, where he is expected to apologize again for the harassment and abuse that employees endured and explain the changes that he says he and his office are already making. Republicans are demanding his resignation in light of the Biden administration's zero-tolerance policy for workplace bullying. In Washington, Amy Morris, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Don't turn the dial, folks. On page 47 of Michael Barr's agreement, we have to talk Tigers baseball every once in a while. I'm sorry, that was painful last night. I watched the end of Tigers and Marlins. Folks, the pitcher for the Detroit Tigers, Reese Olson, is 0 for 4 with a
and it was a 1-0 effort.
ERA.
It was 1-0. I mean, isn't that great?
They look like the Tigers of old. I mean, it's a pitcher's duel, but at the same time, the Marlins won it on a ground ball.
Yeah, that. You know what? My phone has been blowing up. I guess people are feeling sorry for me because they're showing some old Denny McClain pictures from '68 in the World Series.
It was a few years ago.
Yeah, just a few. Yeah. But,
I can see that. Can we get Segui here, Paul, for 30 seconds? Knicks, I'm sorry. Yeah. I'm excited.
It was a great game last night.
They came back after that.
Yeah. They're really undermanned. They got a lot of folks that are injured, but they're a tough team, resilient team, and they showed it last night. So now they head back to Indianapolis.
Do you have your usual seats for the next game, or are you improving?
I might have some good seats. We'll see how that plays out.
You got space for one more?
Can I just, would you take Lisa so she can wear her Mother's Day merch?
Yes.
I mean, very folks, good in her Lisa, put that back out on Twitter, please.
Yeah, that was good.
Can you do a redo of that photo? I mean, what do? The Cherubs give you $4,000 of Knicks merch. You got to put it on.
That would be a good rumor. It's like, is that Paul Sweeney and Lisa Mateo
right
there on the corner?
It's like Celeb Central at Madison Square Garden. Stay with us, folks. 45 minutes away from this key economic data. We are thrilled to tell you at 8:30 in studio, Ed Yardeni. From New York City, this is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still treading water ahead of CPI data that comes out at 8:30 Wall Street time. Ahead of that, we have the bond market. We'll head there. The 2-year yield at 4.79%. That's down 2 basis points. The 10-year yield at 4.41%, and that's down 2 basis points. Over to commodities, we have spot gold higher, $2,363 an ounce. Brent crude, $81 a barrel. NYMEX crude, $77 a barrel. A few companies making news, and this one surrounding ByteDance. Real estate billionaire Frank McCourt expressed interest in buying and rebuilding TikTok. He's also retained Guggenheim Securities to advise in that. And then we have leadership changes. OpenAI, its chief scientist, co-founder Ilya Sutskever, leaving the company. He'll be replaced by the company's research director. And finally, Vanguard named BlackRock veteran Salim Ramji its first outsider to become CEO. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. A little digression here, 40 minutes away from this inflation report. Paul, I'm just lost. I go home like everybody else. I look at the zenith with the rabbit ears. and you know, I got all these chiclets on the screen of things I don't watch.
Right.
And yesterday we had another 3 companies bail in for a bundle.
Yeah, sure.
Why is this not Comcast, Mr. Roberts' Comcast of literally 35 years ago?
Exactly, as it feels like they're just kind of rebooting the streaming businesses to look like the cable bundles. But the problem with streaming is a lot of the power now is with the consumers. You can drop your streaming service with literally one click of the button. You watch Ripley, you're done with Ripley, you can delete Netflix and stop
that's
paying
what
it.
I do.
You can't do that with your cable bill. You know, so what happens is churn. And to reduce churn, what they're doing is saying, let's bundle various streaming services together. That will reduce churn. That will improve the profitability. That's the latest twist in kind of what these media companies are trying to do to capture their...
I mean, they're desperate, but all the mumbo jumbo of your world, Paul, is about, am I right, the consumer's in charge? Lisa Mateo's in charge?
Absolutely. It used to be the cable company was in charge, and they determined what you viewed. Now it's what you want to watch, where you want to watch it, and when you want to watch it. And that's been the point for 30 years. And now it's finally here.
What are the upfronts? You go to the upfronts.
Yep.
You don't sit in the front row.
I know, but I've been following all my friends that do go to the upfronts, and basically Amazon had the buzz this year. And ABC, I think, only has 7 scripted shows for the fall season.
Yeah.
That's down from 21 in 2019. Basically, they're not putting any new scripted programming on their broadcast network. They're putting it all on their streaming. So what are you going to get on ABC?
Reality.
The
Lisa Mateo show.
All that kind of stuff.
You know.
Crazy.
What would the Lisa Mateo show look like?
It would be very scary.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front page is brought to you by the Lisa Mateo Show and IBKR Financial Advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest at IBKR.com/RIA, the star of the Lisa Mateo Show with our newspaper study. What do you got?
Well, all right, this one stood out to me. It's from the Wall Street Journal. Cheating on workplace drug tests hitting the highest rate in more than 30 years. Okay, this was a study, Quest Diagnostics. They took urine samples from 2023. About 31,000 drug screens out of 5.5 million showed signs of cheating. So the percentage of samples that came back positive about the same, but people are tampering with it more. You know, marijuana laws have changed, things like that. How they're cheating, they're using someone else's urine. They're using animal synthetic urine that you can actually buy online. Really? And they're using that. So invalid tests up 45% 2023 compared to the year before that.
So they don't test for weed anymore, right? Because that's legalized. Right?
It depends, different states. That's what I think. So different states have different rules.
Oh, I see what's going on.
Yeah,
Okay.
so that's why there's this gray area now. So more people are cheating on the tests. That's what they're finding. So I thought that was interesting because it shows the workplace is kind of changing too in that way.
Yep, absolutely. So, all right, interesting stuff.
So you were talking about the entertainment, right? So I want to keep playing on this in streaming services. Tom, you're going to like this. The latest Nielsen data shows YouTube giving streaming some competition for viewership, okay? So it shows 10% of the time Americans spent in front of TV screens last month was on its YouTube smart TV app. The top position went to Disney, actually. Disney Plus, Hulu, ESPN, all the same. They took 11.5%. So you had YouTube at 10, you had Disney at 11.5.
Right.
I mean, you see the difference.
I read it very carefully, and it's really coming on. And what's amazing, and we're living this every day, folks, out on YouTube, subscribe to Bloomberg Podcasts, is the combination of YouTube, that's where we are, folks, and YouTube TV, which is totally, and Paul, that's sports. Like they got, come on. They got the money to get that NBA deal or part of it, whatever.
They have films, produce series, sports, live events.
Like what was most important to me on this story was that for the first time ever, Nielsen is tracking broadcast viewership, cable viewership, and streaming viewership. It took them 15 years, but now we're there. And so now they can do it by the show.
Right.
And so what the streaming services are saying to the actors and the writers, I'm going to pay you based upon the viewership to your show because I can now measure it.
And just as, everybody knows this, but the search engine, the knowledge base of YouTube is scary. I was searching David Sanborn for our songs for the day, and instantly I had up all this stuff that Google found of David Sanborn, the great sax player. What do you got next?
So the streaming services are actually up in the ante. They're trying to offer content from top celebrities, musicians, comedy. So Walt Disney came out and they said their streaming platforms added Bruce Springsteen to a list of artists that are producing shows. So his documentary is going to be out October on Disney Plus and Hulu. But Disney, they've already had, Taylor Swift, Beyonce. They've done Billie Eilish,
Bon Jovi's
Elton
out there
John.
somewhere.
Bon Jovi's
on Apple, I think.
Not on Disney, but yep. And then... And it's not just music artists, comedians are big too, drawing in crowds. So Hulu has acquired the rights for stand-up comedian Jim Gaffigan, who's really popular and hilarious, by the way. So his show, The Skinny, that's going to debut November 22nd. But it just shows how much they're scrambling to
Paul,
find
where's
and attract
regular
viewership.
TV 5 years from now? What would Moffat and Nathan
Well, I would argue
say?
it doesn't exist. It does not exist.
Eric, we got to get Moffat on. We got to get Rich Greenfield on. We got to get some Brian Weezer. We got to get some of these animals.
I still pay cable. I
know.
don't know why.
You got one more?
Yeah, one more. Tom Brady's roast. Do you remember that, right?
Yeah,
it was on Netflix.
I missed this.
Yeah, the most watched TV program on Netflix in the last week was his roast. Now he's saying he kind of regrets it a little bit because of the way it impacted his kids. He was thinking about that, some of the jokes and some of the things like that. Nothing about his kids, but, they were poking fun, it's divorce and things like that. So he was actually one of the producers, the executive producer of it. So now he's kind of backtracking.
One of the
and
questions
saying,
is, how much was he paid for that?
Yeah.
Now, I've heard people say $50 million.
Really?
Yeah, I have not
5-0?
5-0.
Ooh.
I don't know, but what would make Tom Brady go through that?
Go through that.
And I'm not even sure for Tom Brady $50 million is worth it. But I mean, he did it, the knucklehead. So deal with it.
I remember. I mean, you guys are too young to remember this, but I remember the rage of the roasts years ago, Don Rickles and Dean Martin.
Yeah.
And I used to sit there and look at them and go, "Why are they doing this?" I never got it. I'm sure we have people listening and watching who love these things, and Damien loved it.
Yeah,
Damien was all over the Tom Brady
it.
roast, but I never got him when I was a kid, and I can sympathize with Mr. Brady's
tough.
kids.
It's like a whole bullying session.
You got one more or what? Are you done?
No, we are done for today.
Okay. Lisa Mateo, thank you so much. On the newspapers there, don't forget, folks, the Lisa Mateo show. Now, the upfronts they're on fire.
Yeah.
I mean, the Lisa Mateo upfronts are.
Oh yeah.
Just,
for the
My
network.
family always says we should be a reality show around the dinner table.
The merch bag, the swag bag for the Lisa Mateo show.
Yep.
A can of yogurt, that's what you get. Yogurt and a spoon. Thank you, Lisa Mateo. Thank you so much, the newspapers today. Red and green on the screen. Paul, this is exciting. 35 minutes.
Yeah.
It's like a jobs report.
This is important. I mean, I think, if you're the Fed watcher, it's where is inflation? January, February, March, a little bit hotter than expected. And what are we going to see in April here? Because a lot of folks would like to see a little bit of a cooling in that inflation print and maybe give the Fed a little bit more leeway to cut rates.
Do you know that our newspaper report is so popular, they're making a podcast out of the Lisa Mateo show?
Don't put more work on me.
Wow. Get that. That's sponsored, no problem whatsoever.
You should see it, folks. I mean, seriously, how she puts this together. She's got like 20 newspapers. She puts it together. Michael Barr did such a good job of remembering David Sanborn of pancreatic cancer here in the few days. We're going to play a little bit of his work, and we're going to emphasize what Michael Barr loves, which is a jazz era. Bob James, Butterfat, David Sanborn.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene. In this hour, the report on the change in prices of the nation. CPI, key to us, if not to Chairman Powell. looking at PC. Retail sales as well. That's a nominal number. We'll have to see how that goes. We'll have all that for you. Some key guests in this hour. Edward Yardeni here on his Roaring 20s bull market. Paul, it is a bull market. We're on the Sweeney Dow 40,000 watch.
We are 39,677. Here was the close. Ed Yardeni, Tom. You look at the resume. Another C.J. Lawrence alum, the smartest research shop pound for pound. Back in the 80s and 90s.
It was,
and
without
they're all
question.
over Wall Street.
You got out a pencil. This is back before PDFs, folks. You got out a pencil and you read every word of it. From Ed Hyman over to Ed Yardeni and on with all the great research they did. We're thrilled he'll be with us. He's been really, really right on this bull market to VIX 13.87. We're on Apple CarPlay, on Android, out on YouTube. Subscribe to Bloomberg Podcast. You can do that, Paul. And we say good morning, Mindanao, which is South Philippines, almost to Indonesia.
All right. I'll take your word for it.
In Mindanao, we say good morning, Davao City. And Paul, it brings up something that's off the U.S. radar, which is the heat wave. It will be 101 today in Rangoon, Burma. And in Mindanao, there is a heat wave, and it's 91. This is serious stuff. Given the lack of air conditioning of that part of the world. It's like
Can't
huge.
imagine. Can't imagine.
And it folds right into China and the economic dynamic that we see. Michael, great to hear from you in Mindanao. Bloomberg Surveillance is important CPI Hour. Brought to you by Cohn Resnick Advisory Assurance Tax. Let Cohn Resnick's enterprise risk advisors help you build confidence in your supply chain using data analytics. Visit CohnResnick.com. With our Bloomberg Business Flash, Lisa Mateo.
You got it. We have little movement in futures right now ahead of today's CPI report. It's expected to show a slight moderation in price increases. We shall see when it comes out about a half hour from now. We'll also get retail sales numbers on top of that. Let's head to the bond market. The 2-year yield at 4.78%, down 2 basis points, and the yield on the 10-year at 4.41%, down 2 basis points. Over to commodities, we have spot gold higher at $2,361 an ounce. Brent crude $81 a barrel. We have WTI crude at $77 a barrel. Companies making news. Boeing could be headed for possible criminal prosecution, down 1%. The DOJ said the company violated a deferred prosecution agreement related to the crashes of 2 737 MAX airplanes. And New York Community Bank Corp, they're up 4%. It's agreed to sell about $5 billion of loans to JP Morgan Chase. And the meme stock craze seems to be cooling down right now. GameStop shares, they are down 7%. And we have AMC, they're down about 7% as well. But those stocks more than doubled over the first 2 days of this week, adding a combined $11 billion in market value. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. It's time for some perspective. We get the gray-bearded one. Bikram Chadha joins us with Deutsche Bank, decades of experience. Binky Chadha, thank you so much for joining us worldwide. Binky, this bull market is real. Why are we going up in price? Is it earnings? Is it revenue misguesses where we're doing better? Or is it some kind of ratio analysis needed?
Yeah. What I would say is, it's really that the business cycle is continuing. There was a very strong consensus, in late 2022 that we were going to go imminently into a recession. That hasn't happened. We are pretty constructive, basically, on the growth outlook from here. And so the main reason, really, for being constructive on equities is earnings. We just had what we think of as basically, a very good earnings season. If you look at the numbers, there's 3 quick points that I would make. Number one, if you look at the beats, we had solid beats between 8 and 9%. And I would point out that this is the 5th quarter of well above average beats. S&P 500 companies tend to beat by about 5%. We've had 7 to 8 and now 8 to 9, and the beats are actually going up. Historically, you don't see beats going up unless you're coming out of a cyclical downturn. So I would say it's in sync with sort of the macro upgrades that, basically continue. If you look at growth that we got, we, have higher growth or growth accelerating basically for 3 quarters. We've moved up now into double-digit earnings growth on a year-on-year basis. We're running between 11 and 12% right now.
Right.
And if you look one level below, there is a tendency to believe that it's all mega cap growth and tech earnings. They, of course, did grow very strongly, barely slowed from the 40% pace that they put in the fourth quarter. But I think it's very important to note that if you take the rest of the S&P divided into two parts, there's the cyclicals and defensives, which is over 60% of the S&P. They turned in very respectable 8% growth, very healthy growth. And so we have headline earnings growth running 11 to 12%, despite the fact that the last group, energy and materials, is still down 25%.
Wow.
And that largely reflects oil and commodity prices. So earnings look pretty good to us.
Right.
And we've actually raised our estimates in response to the earnings season.
So, Binky, with that kind of solid earnings backdrop, do I sit back and just buy S&P ETFs, or do I sharpen the pencil, do some bottom-up work, and try to pick stocks, pick sectors? What do we do from here?
Yeah, in terms of the overall allocation, we would basically be, a little bit overweight equities here still, because we think, at the macro forecast level, at the corporate level, there's been this cyclical overhang. It's lifting. A large part of it is lifted, but we would argue, still has upside. If you think about economic growth, you look at the consensus. Yes, we've given up on the recession, but we are sort of at 2.5% growth. If you look at the components, you will see that PCE, the largest component, the bottom up, the macro consensus still has basically growth below, what it's been for the last 10 years. So that seems like it's just sort of not fully played through. But, the macro consensus looking for investment spending to slow. If you look at corporates and what companies are telling us, there's a lag of capex to earnings. Earnings recovered, very strongly, as we were just talking about, and so capex should be really at the point of kicking in. So there's still upside to the macro consensus, and then there is, of course, the bigger, long-lasting issue of the multi-year destocking that we've seen, and things and various indicators suggest, not least to the PMI, in terms of inventories for manufacturing, that we should be at the cusp, basically, of restocking. All of these things are upside surprises. So the macro consensus gotten upgraded, but we think that there is more room to go. In terms of stocks and sectors, we prefer basically a cyclical tilt, because that's what we are having. Can go into it in a lot more detail if you want.
So, Binky, what's interesting here is we started the year, the market was pricing in maybe 6 rate cuts. And here we sit with, 2 or less than 2. So the interest rate outlook has actually gotten worse. Yet despite that, the S&P's up 10%. That's pretty solid, right?
It is, and most people were really expecting interest rates to have a big impact. We did not. So, I think it's important to sort of point out that the lesson of the last 2 years is that when rates have risen and equities have sold off, it hasn't really been about higher rates. It's really been about the volatility created by signals from the FOMC and then reflected really in rates. And the vol cannot really requires increasingly hawkish or bearish whatever in whichever direction we're talking about vol. It doesn't sustain, and so when the vol comes off, equities rally. So it's really been about vol, and we are now at a point where they may be on hold for quite a while, which is obviously negative for vol and positive basically across asset classes.
Got to run. Binky Chadha, thank you so much for an equity market brief. Really thrilled, folks. Bikram Chadha with us. Ed Yardeni will be with us later, and then Gina Martin Adams as we move to record highs in the stock market. The VIX 13.82. With our news in New York City is Michael Barr.
Thank you very much, Tom, Paul, and Lisa. Lots to talk about that's going on here today. The latest that has taken place now, they have had primaries in 3 states, including one in Maryland, where it looks like they will be facing the Republican Larry Hogan, who was the governor there. More now with Bloomberg's John Tamari in Washington.
It's not the kind of state that you would normally think of as having a big Senate race, considering how Democratic it is, considering they haven't had a Republican senator in over 30 years. But you've got an unusual Republican candidate there, Governor Hogan, who won 2 terms there as a Republican, is now the Senate nominee. And Republicans think that he can put this state in play, or at the very least, make Democrats spend some money there that they might prefer to spend in some other states like Montana or Ohio, which are typically tougher battlegrounds.
Bloomberg's John Tamari. The Biden administration has announced that they will send more than $1 billion in aid to Israel. This comes after just a few days ago, the Biden administration announcing that it would suspend aid if it was going to bomb Rafah. Finally, let's give some love now to the winner of the Westminster Kennel Club Dog Show.
The Best in Show winner at the 148th Annual Westminster Kennel Club Dog Show is the miniature poodle.
Good old Sage. She beat 6 other dogs, including a German Shepherd who came in second. Sage is beautifully
The German Shepherd
coiffed.
always comes in second.
I know.
It's not cute enough.
I know. Global News 24. My dog drank out of the toilet. I mean, come on.
That's a proper dog.
That's what dogs do. But this dog is beautifully coiffed, and Global News 24 hours a day.
Coiffed is the right word.
Yeah. Whenever you want it with Bloomberg News, I'm Michael Barr. Back to you.
Lisa, I mean, come on. Good morning. Heritage Poodles, New York. AKC Miniature Poodles, applications open. It's like getting your kid in a nursery school. They have upcoming litters, DNA tested, health screened, AKC Miniature Poodles, guaranteed cute.
Oh,
wow.
Here's
How
a
much
photo.
are they going for?
Here's Princess Leia. Padme Amidala. I don't even know what that is. Good morning. They're going to be a little busy today, Paul.
Yes.
Heritage Poodles, New York.
Priced upon request is probably how that's going to go. Exactly. So
A couple thousand.
that was pretty fun to watch. I love the Kennel Show.
It's the best.
Yeah.
It was on Fox, by the way. I should note that.
Yes, we should.
But there were dogs there that, I mean, listen.
Can they just have a normal dog win?
Yeah,
Please?
I want to see like the Mutt Show.
Yeah.
That's the one I want to see.
They're important.
I like the people who run with the dogs around the ring.
Oh, yeah.
That's a whole
Yeah.
separate. That's a whole
Yeah.
separate.
Can I say a shout out here on dogs? Keith Oberman has been dedicated to helping the mutts. Like, week after week after week, Oberman is saying, what are we going to do with these mutts? Pick up a mutt. A mutt's just as good as a fancy miniature poodle. He's really, really led on that. Good morning, Mr. Oberman. That was wonderful. Michael Barr, thank you so much. Futures 13.81. From New York City, this is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still treading water at this point as the clock ticks closer to CPI data, less than 15 minutes away from that, and retail sales as well. Now, investors hoping that report won't undermine the case for interest rate cuts from the Federal Reserve. There's been a lot of Fed speak about it, yet Chair Jay Powell signaled that interest rates will be higher for longer. The Fed's Jeffrey Schmidt said rates could remain high, quote, for some time. Moving over to the bond market, we have the 2-year yield at 4.78%, down 2 basis points, and the yield on the 10-year at 4.42%, down 2 basis points. Over to commodities, we have spot gold higher at $2,362 an ounce. Copper actually surged to a fresh record in New York. And then we go to oil, Brent crude at $81 a barrel. Companies making news. We'll start with Tesla. Reuters reporting the company has filed a notice saying it plans to lay off an additional 601 employees in California. And finally, Boston-based Converse cutting some jobs. It's part of its parent company, Nike's $2 billion cost-cutting plan. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, remember Converse PF flyers?
Oh, absolutely.
The rich kids had Jack Purcells.
Yes.
Remember Jack Purcells?
Yep. Chuck Taylors.
Chuck Taylors and the whole thing.
Yeah, when I was a kid, we didn't. My mother did not want to spend the money for Converse, so we got the Sears store brand.
Oh yeah.
Bad.
Oh yes. It was embarrassing.
So when I finally had a couple shekels in my pocket, I went out and bought my
you
first
got your
Converse.
real Chuck Taylors.
Real Chuck Taylors. The kids wear them now, though.
This is trauma.
They really do.
This was like huge trauma back then, way before all this madness that Michael Jordan invented. We are commercial free for you through a good part of this 8 o'clock hour. Joining us now in preparation, Ed Yardeni with us in 12 minutes. Matt Miskin with us right now with the John Hancock Company, Boston. Matt, just simply, is this CPI report market moving?
Should be, yeah. I mean, we've been all waiting for this for weeks, I believe. And we're going to have to see if the Fed has been right in being more dovish. Powell has been, his middle name should be easing financial conditions at this point. But we're going to have to see if we get more stagflationary readings, because we're going to have back-to-back inflation and retail sales, 1-2 punch.
Paul, you've been way out front on this. I mean, in terms of the market as an expectation force, we've had the Sweeney bull market here to Dow 40,000 in advance of this CPI report.
I think so. And, Matt, when people think about the stickiness of this inflation, they call out shelter. Can you kind of give us your sense of kind of what's going on out there in terms of rents and housing costs and how that impacts the inflation data?
Well, it's still amazing to me that we are calling people up and asking them, if you were to rent your house, would you rent it at?
Right.
That's what we're doing. We have AI toothbrushes nowadays, but we can't figure out a better way to measure housing prices. Zillow is saying now that housing prices are moving up, though. Unfortunately for the Fed. But there's been a battle between the Fed and the housing market, and the housing market's winning. And so we think shelter's actually going to come in a little hotter. And 2/3 of these inflation reports, the core inflation, is coming from shelter. So it is hugely important, and unfortunately, we're terrible at measuring it.
Paul out on YouTube. Brent, thank you so much. He says Houston is slow.
Houston is slow. Okay. Well, they've had a nice run there. So, all right. So, Matt, I mean, I guess this Fed is at some point going to be raising rates. I guess they've taken the rate hike maybe off the table. If that's in fact the case, maybe it's just a question of timing. What are we doing here in terms of kind of looking at stocks, bonds? How do we allocate given an environment where the Fed should be cutting at some point?
Yeah, so I think the timing element in there is the key point. So, over time, think about Powell more as like a lawyer. And right now, over time is what he's saying, because he knows technically that's what's in the mandate. It's like if I tell my kids to clean their room and they say, I'll clean it over time, Dad. It's just taking forever. And so you're living in a higher inflation environment, and this higher inflation environment is going to help rotate stocks out of high quality concentration. We think this rotation has legs. Bonds, it's going to be chopped, but we're looking at backup in bond yields opportunistically. Look for some high quality bonds to buy if you see a hotter report. But volatility is probably in there.
Everybody lost their focus. Surveillance Nation wants to know, Matt Miskin, have the kids cleaned their bedroom?
No, I'm still working on it. Over time,
over the medium term, at least. Paul Donovan was on earlier from UBS saying the same thing. the communication of the Fed, micro speeches, micro this. I love what Odd Lots did, Paul. Tracy and Joe went down to Richmond and looked at a Rotary Club speech, whatever. Matt Miskin, is there too much communication into this report in 8 minutes?
Yeah, forward guidance has not helped. Saying you're going to cut rates before you're able to cut rates has been a negative. That's actually caused housing to bottom and reaccelerate, which is going to cause inflation to reaccelerate. So there's no one else to really point the blame at for this reacceleration or an inflation impulse we've seen in the U.S. other than the Fed.
Yeah.
But we think they're going to have to be more hawkish the next couple of months.
Great live YouTube here. He says, okay, Texas is slow, and we all get that. Out west is slow across the Mississippi. Paul, this goes to the Wall Street Journal thing yesterday. You and I were talking before the show about New Jersey home price appreciation, and the gentleman out on live chat says same thing in Connecticut as well. Yep. There's no slowdown.
No slowdown in this part of the world here. So, Matt, I mean, what do you think the Federal Reserve should do here? What do you think the data is telling you and maybe some of the clients you talk to?
Yeah, just not to talk about rate cuts. Let the lagged impact of monetary policy slow down the inflation. And then just, I think there will be a time to cut, but really to wait until the labor market starts to adjust, unemployment rate starts to go up, and that's when you're going to cut. And I think anything other than that right now is going to just prolong over time this higher inflationary regime. It's, consumer sentiment is getting hit by it. People are definitely sick of it. And it feels like it's even more inflation because even though the rate of change is slowing, they're still so elevated from a couple of years ago. So I still think they have work to do, but being more hawkish in their communication and just not saying much would be the great start.
Matt, are you surprised that the S&P 500 up 10% this year has done as well as it has in an environment where rate cut expectations have really been dashed? We've gone from 6 cuts to now the market's pricing in maybe 2 or fewer.
Yeah, it's been amazing to see. And a lot of it's multiple expansion. So sentiment has come from other places, an improvement in sentiment. And really, I look around the world, China is having a stimulus headline released almost every day. I mean, I was listening to you all last couple of days, from issuing bonds to maybe buying the whole real estate market. In Europe, things are improving. So globally, the sentiment has improved. I think the U.S. is actually of the worst performers in this period as global growth has improved. But nonetheless, it's still getting some of that remnants, multiple expansion of the improvement in global sentiment. But at some point, multiples are going to tap out. We're almost at 21 times again on a forward PE, and I don't think it can get much higher than that.
Matt, thank you. Matt Miskin with a brief, the John Hancock Investment Company. Thank you to Matt Miskin and Emily Rowland for their input here from Boston. Joining us, it's where in New Jersey is Bloomberg Intelligence?
Is in Princeton or Skillman, depending upon how you want to.
How far is Skillman from Princeton? Like 3 shopping malls?
Yeah, it's a 5-minute drive. It's right
5-minute drive.
Yeah, you go by the Tiger's Tail, which is a nice saloon there, right by the office.
Oh, what a shock!
Yes, exactly.
Joining us from the Tiger Tail right now, Ira Jersey down in Princeton here, Bloomberg Intelligence here on the bond market into this, and Ed Yardeni will join us after we see this report. I just want to go to my narrowness, Ira, which is the real yield. It's range bound. 210 to 220, 210 to 218, but it's got that feeling of getting out front. Can we reestablish a disinflation vector in 5 minutes and get the real yield to really come down outside that range?
I would imagine we would in that situation, Tom, where if we get a number that's, I don't know if, 0.3 certainly wouldn't do it, but if we had got a 0.1 or a 0.2 that seemed to be a turning point in the recent inflationary uptrend, then you could probably get real yields below 2% in a hurry. The market is kind of set up basically on nominal space. So just looking at something like 10-year treasuries for a 10 basis point rally, kind of a relief rally if we wind up with lower than expected inflationary numbers. Now, will we get that? It's hard to guess, but my feeling is that we still have a lot of services inflation, so it's going to be really difficult to see very benign numbers in terms of inflation today.
So, Ira, from talking to you and reading your research, I know to focus on that 10-year Treasury, and it's, in the last 3 weeks, it's come down from 470 down to this 440 level. Is that the market telling us that the Fed is more likely to cut rates sooner rather than later, or is that just within this trading range?
Yeah, it's not. Well, firstly, I think it is a trading range. So 431 is the next really important technical level. So talk about a 10 basis point rally. Like everything's going to set up to hit 431 before we, maybe go back to 4.5 at some point. But I think Paul, what we're looking at here in terms of the what the 10-year is pricing versus say the front end 2-year Fed funds, for example, is that the Fed is going to cut at some point, right? That's why the curve remains inverted, but it's not going to cut very aggressively and it's not going to cut very quickly. So that's I think that's what the market's starting to tell you, is that it feels that maybe we'll see 4% in 3 years in terms of the Fed funds rate. It's not saying now that we're going to go down to 3, as you noted before with the prior guest.
Why are spreads so narrow? This has been a great thing. Megan Graper, thank you so much at Barclays.
Yep.
Ira Jersey, this is like John Templeton 40 years ago. There will be a shortage of bonds. Is there a shortage of bills, notes, and bonds?
No, they're certainly not. Although the dynamics right now are interesting because the Treasury Department is not going to be keeping the amount of notes that it's issuing the same probably for the next 6 months to a year, and because of that lack of supply or lack of increased supply, you definitely have some people that need duration, need bonds, and now that you definitely are seeing flows into fixed income because now there is a yield, right? Like a couple of years ago.
Yield, yeah.
There's some kind of yield now, and because of that, there is some interest in people reallocating, particularly when you see equity markets, at or near the highs. You have people who are, want to be 60-40 or 70-30, right? They want to take a little bit of risk out. It was hard to do that, right? It was hard to say, hey, buy 10-year treasuries at 1%. Now, when you say, hey, buy 10-year treasuries at 4.5% and kind of lock in that return, people are more interested in it now.
Let me slip in one more question here, 2 minutes away here from this key market-moving economic data. Ira Jersey, scheduled Ed Yardeni. We'll have them both with you together at 8:31, 8:32. Ira, the real yield, is it historically rich? I mean, going back to Credit Suisse, when you and Dominic Constant programmed in Fortran, I mean, is the real yield rich right now and opportunistic?
I don't think so. I think between 1.5% and 2.5% on 10-year real yields is probably a reasonable number. When you go back historically and you look at the late 90s when the product was first introduced, you had very high real yields, and you had a couple of things that were different. One, you had Fed funds rate that was 2.5% higher than it is now. You also had a liquidity premium, right? It was a brand new product. There wasn't a lot of supply outstanding, so there wasn't the price discovery that you had. But if you go back to the early 2000s, I think that's a more reasonable level. So call it 2.5% real yields. That's your expected return over inflation. Seems reasonable.
We're going to stay with Ira Jersey, and again, Ed Yardeni scheduled to be with us, Gina Martin Adams on in a while. Paul, it's a raft of economic data today. Retail sales, CPI.
Yep.
Alex Steele will bring you business inventories and the NHB Housing Market Index.
Yep. A lot happening out there today. A lot for the Fed to parse, and people like Ira Jersey who take a look at what's happening in the Treasury market and monitoring the behavior and the activity at the Federal Reserve. A lot to chew on today because CPI is a key ingredient.
Am I old school where I just go to core CPI year over year? Jersey doesn't do that. Ed Yardeni doesn't do that.
I don't know. I go that
3.6% is a model. We're supposed to come in from 3.8 to 3.6%. It was so much better years ago with C.J. Lawrence, where you had to wait 3 days to get the pigeon to fly in with the Ed Yardeni. We'll get to Mr. Yardeni in a moment. Now, the CPI report to move the markets. Oh, Paul. Moonshot. I mean, there's no other way to put it. Empire manufacturing grim. Inflation comes in with a disinflationary tendency. It's fractional. Month over month CPI comes in not 0.4, but 0.3. The revisions to retail sales are a lesser tone to retail sales. In present retail sales, crater's too strong a word, but on the control group, retail sales control group, Robert Schiller talked that at Yale, retail sales control group is a negative 0.3. Paul, are we there? Are we to 40,000 yet on the Sweeney indicator?
We are darn close. We got the S&P up 0.5%. Same for the Dow. NASDAQ up about 0.6%, Tom. And the 10-year Treasury comes in about 8 basis points, 4.36. And Ira called out that 4.31 is a technical level. But again, just the CPI month on month, 0.3%. Consensus was 0.4%.
Ira, you got to go write a research note off. Futures up 28. And of course, the real yield looking right now down to 2.04%. Give us a look forward on the first paragraph, Ira Jersey.
Yeah, so the CPI numbers, I don't think is what's moving the market. It's what you guys just mentioned on the retail sales report. You look at the control group, that's ugly. That's the input to GDP. And this is the first look that we have for the second quarter. And the second quarter is not starting out particularly strong. So when you look at core goods CPI, right? So not core services, but core goods, that tends to have a very strong correlation with retail sales. So slowing retail sales may mean that you have lower goods prices, or at least goods prices that aren't growing significantly in terms of price. So I think that's what the market's currently reacting to. And like Paul said, the 431 is going to be the next important level for 10-year yields.
Ira, thank you so much. Ira Jersey off to publish for Bloomberg Intelligence across this nation and worldwide. Again, good morning, Mindanao and the Philippines. That's our city of the day. We welcome you to a key inflation report, not only for the American Central Bank, but globally and particularly for EM as well. And we're thinking of the heat wave over in the Pacific Rim. Futures heat up 31. Paul's going to get us 40,000 today just because Ed Yardeni walked in the door. Dow futures up 180. The VIX 13.28. It's a lot coming up here as well. Dana Telsey will join us on retail, where they're just iconic, just solid retail knowledge with Joe Feldman. And now we're thrilled to have for you, and I call it from October to Octobers ago, the Yardeni Encampora market. Ralph Encampora, the technician, and Ed Yardeni of Yale with economics and markets called this great bull market, and we're thrilled that Mr. Yardeni, Dr. Yardeni, could be in our studios today. Where is your S&P target? And with a report of disinflation and sluggish retail sales, does that make you move it up? Can we make some news here on S&P 6,000?
Well, I've been actually getting a lot of people asking me, am I going to raise my numbers? And I thought my numbers were pretty aggressive about a year ago. At 50,
but you're on surveillance now, so we got to make some news.
Well, we're at 50. My target is still 5,400. Still use it, but it's a bull market. I can't time it exactly and precisely, but I think we're heading towards 6,000 by next year and 6,500 the year after that. So that's a 25% increase.
My great theme, and I say this to the Eds, Ed Yardeni, Ed Hyman, and others, my mantra from my father is corporations adapt and adjust.
Right.
How are corporations adapting and adjusting to Ed Yardeni's roaring 20s?
Well, I think you're seeing a tremendous amount of spending on technology, not just
totally agree. Number one.
Well, if you look at capital spending in current dollars, 50% of that now is going to technology capital spending, and that's an understatement because it doesn't include things like trucks. I mean, why would a truck be, IT? Well, the truck is the device, and the logistics software is what runs it. Everything's technology. So my pet theory here is that when you look at the stock market, you have to think of every stock as a technology company. They're either making it or using it. If they're not using it, they're going to lose it.
Yeah, that's a great point. How can this retail sales number, Ira Jersey was suggesting that's what the market's focusing on. Again, the retail sales control group came in at negative 0.3%. The consensus was for a positive 0.1%. I know last period was actually 1%, so a real fall off there. What's your view of the consumer, Ed, and how do you think that the Fed is looking at the consumer?
I think it's important to remember when these numbers come out that it's merchandise, it's goods. Mm-hmm. And what's been interesting is we had this buying binge coming out of the pandemic lockdowns, and people couldn't buy services, so they bought a tremendous amount of goods. And then they didn't stop buying goods, they just didn't increase their purchases. So purchases of goods is still at an all-time record high. It's just been kind of sluggish, flat for the past couple of years. Meanwhile, services is absolutely booming, as we all know, if you go to the airport, for example, or restaurants.
With the amount of gray hair in this room, folks, Ed Yardeni with us here with futures up 27 off a sluggish retail report. In Netflix right now, there's a spectacular black and white series called Ripley.
I saw it.
You
It's
saw
great.
it.
Yes.
See, you got another one. Tom.
Early in it is the communication that you and I knew years ago, pre-technology, of the Mont Blanc Meisterstruck 149.
Really?
$900. It's a big,
That's a pen,
ugly
folks.
Mont Blanc that only the rich
Yep.
kids had.
That's right.
When we were in school.
Yeah,
now we've got yesterday Google coming out
Right.
with this incredible, and Gene Munster was plus on the new search, the new AI. The technology in your controversial call of Roaring Twenties, is it about AI? Do you believe in AI moving the Dow above 40,000?
I think so much money is being spent on AI that a good percentage of that is going to pay off. I think there is a certain amount of hype. I think open AI, where it's open to the internet, I think that's going to turn out to be a very big disappointment. It was for me when I signed up for it and hoped that it could write my daily briefings, and I had to spend the whole day correcting its errors. But I think as long as companies put in just their company data, it's going to turn out to be a supercharge. And nobody's even talking about supercomputers anymore, because the GPUs, when you pile them all together, they seem to be fast, do the job. They seem to be fast enough. So look, I think the stock market started to discount the roaring 2020 scenario on November 30th, 2022, when OpenAI introduced ChatGPT.
Okay.
And now, all of a sudden, utilities are AI plays. Copper is an AI play. So
I look at M&M theory. You know, and I've never been a big fan of the certitude of it. I think it's really squishy. There's a lot of problems. But the bottom line is, on use of capital, the new rage is, again, share buybacks. They're exploding. Ed Yardeni, on the support that share buybacks give to the bid, is that constructive or is it ephemeral?
Well, it is what it is. I think it's real money, and the money is going to buy these stocks back. So I think it's certainly another factor behind the stock market doing quite well.
Ed Yardeni with Yardeni Research. He just had a new hire. We'll talk about that later. Tom Keene and Paul Sweeney across this nation with futures up 25. Sweeney's going to get us down 40,000 today.
I think so.
Probably he and Alex Steele will see that later on. Paul, the 10-year real yield down to 2.07%.
Yep, we've had that pullback again. The 10-year just trading here 4.36 on the 10-year. Ed, so are you surprised that this S&P 500, that this stock market has done as well as it has this year, up 10% or so, in an environment where the rate cut environment has really become bearish? It went from 6 cuts to 1 or 2 today, whatever it is.
No, I'm very encouraged by that. It shows that the economy can live with these interest rates. The stock market can live with these interest rates. These are normal interest rates. The Fed has really normalized. We're back to where we were before the insanity period, from the great financial crisis to the great virus crisis. So normal is good.
Normal is good. So it's been earnings. I mean, earnings have been.
Earnings are doing just fine.
Okay.
Ed Yardeni with us, folks. We're going to continue. Dana Telsey on deck here in about 15 minutes. Generous of Ed Yardeni to be with us this morning. Our economic indicators, and they moved the market this morning. Thank you to Commonwealth for their commitment to Bloomberg surveillance. The indicators brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. For those of you not in the game, why are we with Ed Yardeni? Because he made an incredibly lonely, fundamental economic call 2 Octobers ago to say you should own equities in America, and he does this always with a more long-term basis as well. I want you to speak to the trillions of money that's out there right now. And yeah, it's joined 5%, and there's taxes or whatever, you know, you have to go into the net. But the bottom line is they read Ed Yardeni or listen to you in trepidation. Give them the confidence to make the first marginal investment.
Well, there's a tremendous amount of money in money market mutual funds, as you said, and people have been very comfortable earning 4.5%, 5% in these instruments. But that is it is a short-term instrument. It's a short-term play. It's not a long-term bet on prosperity, which is what equities are, and even some corporate bonds certainly are a bet on long-term prosperity in the economy. So I think I've got nothing positive to say or negative to say about people who feel that they want to not take very much risk. I think, by the way, it's great that interest rates are back to levels where people who don't want to take risk, don't want to be in the market.
That's what Sweeney's doing.
Yeah,
I mean,
flipping coupons. What sectors in the equity market do well in an environment where the 10 years, 4.5%?
I think the answer is becoming all of them. I mean, who would have thought that utilities are plays on artificial intelligence?
I didn't see that coming.
And suddenly copper is another way to play information technology. So I've been recommending information technology, financials, industrials, but the market's clearly broadening out back to, I think we're seeing some excitement in SMID caps, even emerging markets. I mean, we've got global stock markets at an all-time record high, excluding the U.S., and the U.S. will be at a record high very shortly.
On Friday, and folks, full disclosure, I mean, everybody that comes into us, we protect the copyright of all their work as we do with Ed Yardeni, but I really want to emphasize that our Yardeni Research has very accessible short notes. I mean, it's the price of like 2 martinis.
Yeah.
It's like, well, okay, at the Carlisle, but we, Yardeni's living large with some great publications, and I urge you to look at them if you desire concision in your reading. The Doom Clue publishes on Friday like clockwork to get through the entertainment of the weekend. They're humbled. What do you say to the Doom? What did the Doom crew get wrong? To me, on an ISLM basis, is they're completely focused on the parlor game of the Fed, and they're not focused on the dynamics of the broader IS world, which is the real economy, which was gospel at Yale a few years ago.
I mean, I had to unlearn a lot of things I learned at Yale, quite honestly. It's very Keynesian in its orientation. But I've become, like the Fed, very data dependent, and I try to look at the big developments. And I think where a lot of economists missed is the demographics. We've got baby boomers that are retiring, and they don't have a lot of them don't have a mortgage. They don't have college tuition payments anymore. They just have lots of time on their hands, and they've accumulated enough money to go on cruises and go to restaurants and check into the hospitals every now and then just to make sure they can keep going.
Is he looking at us or Tom? I don't know.
I don't know. I got to do one more question here, and this is an audible, folks, on my part. We at Surveillance always look at the great journalists, or even over the Death Star. Keene has been on fire, I should say. There was a guy at the Journal named Wallerstein who did some great work on macro.
Right.
He's died and gone to heaven, and he gets to work for Ed Yardeni. How in God's name did you get Eric Wallerstein to lose the dark trade and come over and make, and get a real job?
I offered him a job, he took it, and it was a done deal, like in an instant.
What's he going to do for you?
Well, he's going to do everything that I do, but his background is he worked on the Fed's open market desk, so he's a real whiz kid when it comes to the fixed income markets. So he'll certainly give us a lot more depth in that area. But other than that, all hands on deck, and he's another hand on deck.
Let him go to the Lisa Mateo Media School, and then we'd love to have him in. Dr. Yardeni, thank you so much. And can I say this? I'm going to put Ben Laidler in this group, Ralph Ancampora. There's a few others, but Ed Yardeni, like nobody, has called this great bull market of October of, I think it's 2000.
C.J. Lawrence, Prudential Securities. I mean, the list of alumni of those two shops alone.
C.J. Lawrence was green ink, right? It was like a green ink.
Yeah.
You'd sit there.
We got the same thing.
With a pencil in your hand. And Yardeni's got the same C.J. Lawrence, and it was like, Ed Hyman sort of invented it, and Yardeni came along and gave it this whole twist. It was better when it was printed. Am I right?
I don't know. We're high tech now, so I'm not going to agree with that.
Okay. Ed Yardeni, thank you so much.
Thank you.
Thank you for your support of what we do as well. Good morning, Eric Wallerstein. Futures up 23, Dow futures up 138 off moldy retail sales. What do? There's Poonam, we can call him Poonam, or Jennifer Bartuchis and the others. We go to Dana Telsey of the Telsey Advisory Group. She's been waiting, listening to Ed Yardeni as well. Dana, pretty moldy control group. Is that a trend? Is it a weaker retail sales trend that you and Joe Feldman have to work with?
Yes, it is. It is a weaker retail sales environment. You have a consumer who's much more cautious and discerning than they've ever been in the past. You're seeing greater clarity to margins and profits than you are to sales, given that inventory levels are lean. And the consumer in all income levels have moderated their spend a touch. Certainly what you and I talk about, Tom, with the uber high end, like the Hermeses of the world, they're continuing to spend. But beyond that, we've seen people be definitely more cautious in what they're spending, and retailers are aware of it.
Right. I mean, Red Lobster with some challenges to say the least, even though Mike McKee is, Mike McKee's there like 3 days a week, having the lobster and steak special.
Of course.
Some byproducts in the steak. But are we going to see a workout here in retail, in middle retail, the middle department stores, in the lower ranges? Dana Telsey, are we going to see a rationalization of stores?
I think we've been seeing that. Look at Macy's announcements of their store closures that's out there. We haven't had many companies on the watch list, but you have had announcements of closures. 99-cents only stores going away. Express closing a bunch of their stores. So it's getting more productive. But the interesting thing, for all the closures, there is more demand for space than there is supply. I'm sure if you walk around Manhattan, we're seeing a pickup in occupancy. You're seeing more new stores come. This weekend is the International Council of Shopping Centers convention, where the retail real estate audience gets together. And I think we're going to continue to hear of more demand than supply, because retailers are investing in their footprint, because consumers want that social entertainment of going to a store, and they could buy online and pick up in store also.
I mean, Paul, the retail's convention, that's like the plumber's convention. How about that square footage at the Short Hills Mall?
Exactly. All right, so Dana, what do you expect to hear? What are you going to be listening for from Walmart tomorrow, as they report the results? And, because we always feel like we can get a pretty good sense of how the consumer's doing out there.
That's what I want to listen for. I want to hear how the consumer's doing. I want to hear how they're planning inventory. I want to hear about category performance, discretionary versus essentials. I want to hear about costs. How are they managing labor costs? Remodels, they're remodeling stores. What are they seeing on those remodels? I want to hear about e-commerce, and I want to hear food and grocery versus the other categories. I think there's a lot to learn about the overall consumer environment from Walmart's release tomorrow.
Dana, one final question here. Thank you so much for being with us. The market's moving. We got to migrate to market chat. Dana, which part of retail is the greatest opportunity 3 years out? Is it luxury? Is it the beleaguered middle ground? What's the part where you say 36 months from now, this is going to provide total return?
I think luxury will provide total return. I think the Chinese will come back to spending. I also think the strength of off-price and the continued share gains they have, I think there's continued opportunity there.
Dana,
and let's not forget the brands.
I got 8 more questions, but I'm time. We got to get you back here soon as well. Dana Telsey, the Telsey Advisory Group. Maybe we'll touch on luxury with her next time around. Bloomberg surveillance on this key day of economic data. We're brought to you by Interactive Brokers, their bond marketplace. Access their vast selection of over 1 million global fixed income securities, no markups, no built-in spreads, and low transparent commissions. Learn more at ibkr.com/bonds. Right now, Paul, the Boston Red Sox have a control group.
Oh, boy.
It's like, can you get the guy on second home? That's sort of like the basic idea. Joining us now with the Red Sox update, Michael McKee joins us here off the economic data. Is a vector in place now of continued disinflation?
You're talking Red Sox or you're talking CPI?
No, the pitching staff's going to disinflate at some point, but CPI.
I gotta say, I won't be at Red Lobster, but I might be at one of the other fine lobster establishments in Boston if the Bruins keep winning. Shout out to the Bees last night. Yes, that's kind of the impression that we are going to see continued disinflation now. you got to take apart the report to see where the good news is, because even in some of the bad news, there's good news. And that auto insurance, which had been running over 2%, is up 1.8%. Still outsized, but an improvement. And then for those who like to dig deep, like our friend Omer Sharif at Inflation Insights, he points out that if you take housing out to 3 decimal points, you'll round it up, you'll round it down, and you'll see that while the CPI report says owner's equivalent rent was at 4%, or 0.4%, it really comes in at 0.36, and rent overall at 0.35, which is the slowest that we have seen in this cycle. So overall, there is some optimistic news.
All right. Retail sales, the other data point that came out, Ira Jersey suggested the bond market's reacting to this print. The retail sales control group came in at negative 0.3% versus the consensus positive 0.1%. What do you make of that?
Well, the control group is primarily going to be influenced by a big drop in non-store retailers, which is online sales, down 1.2%. But in other categories that fall into that, you see strength. Food and beverage stores up 0.8, grocery stores up 0.6. The clothing stores were up 1.6%. So a lot of the decline in the headline number and in overall retail sales was motor vehicles, which has a big weight, down 0.8%, and sporting goods down 0.9. So the things that people regularly buy, they bought more of. The things that they don't buy regularly, they bought less of.
There's a pinata known as the housing statistics, the rental statistics, and that. Are motor vehicles the same way? Are they goofy? Or are they like real numbers that help people like you figure out where we're going?
They're real numbers, but it's different in the CPI because it includes motor vehicle and parts dealers, and they're looking at what the dollar figure spent is, as opposed to what we report at the first of the month on unit sales. So it is different, but it does show where the money didn't go.
So I like the way, or at least kind of was clear to me, the way Bloomberg News is reporting this. A measure of underlying U.S. inflation cooled in April for the first time in 6 months, indicating price pressures are abating gradually and supporting the Federal Reserve's intent to cut interest rates later this year. You think that's accurate, or are we not going to take too much from 1 month? Or the fact that we did have a nice break in inflation, that's notable?
It is notable. David Kelly just had a great line. The Fed has a reaction function. The market has an overreaction function. and so I think the market is going to take this and run with it. The Fed is going to want to see more evidence. Jeff Schmidt from the Kansas City Fed gave a speech last night in which he said a drop would be good today, but it isn't just 1 month.
Yep.
And that's been basically the refrain from all of them. So they're going to be less excited about this than the market is going to be. But why it's important in the markets is this sets the tone for the next 2 months, because we've got a PCE at the end of the month, and then we have the jobs report. But basically, those are the two main data points. The next CPI isn't until Fed Day. So,
and do I understand it correctly that this retail sales control group, that is a component of the core PCE? Is that true?
No, it's not the retail. There's a similar thing you can do with the PCE, but the retail core is you take out the gasoline stations and you take out building materials and you take out autos, because those go into GDP in different categories, and then those are deflated separately.
Does the number, one final question, does the number today help us get to June 12th, the Fed meeting pre-Jackson Hole?
Well, I hope so, because I don't intend to die before then. But I don't know.
There's a lot more data.
This is going to happen.
Well, that's what I was just saying. There isn't a lot more data, because the numbers that really matter to the markets, we won't get another CPI until Fed Day, and we get one jobs report. The PCE number at the end of this month will be very important, because the numbers after CPI and PPI, analysts are thinking it's going to show a weaker PCE.
When do we go to Jackson Hole? Is that July or August? When did we go?
End of
Yeah,
August.
but
End of August.
McKee's
We
got
go.
like
Okay.
3 junkets out
The
there
history
early.
of it, the history book of it is called In Late August.
Okay.
In late August.
Okay.
But the
All right, I'll clear my calendar.
The McKee reality is he's out there like, July 15th doing this symposium.
Yep.
He does the Rainbow Trout Symposium. And then he does the Rocky Mountain High Symposium. And,
I understand. Yeah, I'm not sure I need to come back. I'll just go out
exactly.
there. Wait
Michael
for you
McKee,
guys.
thank you so much. Perchance, if you can, read the Wikipedia on David Bowie's Miracle, Young Americans. This was a British kid, obviously very successful. And he said, I need to figure out soul. And when he and Tony Visconti put that album together, they called David Sanborn. We have lost David Sanborn. Here he is with Bowie's classic.
He kissed the diamond there. She took his ring, took his babies. It took him minutes, took her nowhere. Heaven knows he'd have taken anything. All night. She was a young American. The young American standing right through the pit.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Bloomberg Surveillance with Michael Barr. Lisa Mateo has darkened the door as well. We're going to get to it quickly here to get to Gina Martin Adams. We had some inflation, disinflation in order, and sort of soggy, sluggish retail sales. I mean, Paul, the control group.
Yeah.
What's the control group? My kids are out of control.
Yeah.
So what is the control group?
I have no idea, but the economists tell me we got to pay attention.
Yeah.
And it was, it was a little bit, it was weaker. Negative 0.3%. Consensus was positive 0.1%. So a miss there. But, inflation cooling. That's probably the key thing. That's what the markets are
the markets are just really upset. Futures on 5,300. Dow futures got up to 39,900, 39,800 now in Dow. NASDAQ futures up 0.4%. The Lori Calvazina index. Small stocks, that's up to 1.1%. The real yield's what I'm watching, 2.05. It comes in nicely. See if it breaks out of that tight range, but that's a lesser real yield, I would say, off that key economic data. Good morning on Android Play, Apple CarPlay. Good morning as well. On YouTube, subscribe to Bloomberg Podcasts and search Bloomberg Podcasts to get there to our great report. The replay, 2 hours and 56 minutes. Look for Paul Sweeney and Alex Steele in the 10 o'clock hour as well. Bloomberg Surveillance this morning. Brought to you by BNY Mellon Insight. Let me spell it, INSITE. Insight, June 4th to 6th. Nashville. Somebody said you have to say Nashville, Tennessee. I said, there's one Nashville.
Exactly.
There's Nashville. Nashville, Insight, June 4th to June 6th. Nashville. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. Why do you bring her? You have to have courage to stay in the marketness. Oh, we got to do. Excuse me. I got to do the. Oh my word! I'm so excited about Martin Adams being here.
Her agent would be all over us. Tom.
Her
people.
Katie Greifeld's agent called me yesterday during the middle of the show. I'm sure Lisa's agent's going to call like in 30 seconds. The Bloomberg Business Flash, Lisa Mateo.
Her makeup craze was crazy yesterday. I love that. Good morning here. Stocks rise, yields fall. The CPI data cooled in April for the first time in 6 months. And U.S. retail sales stalled in April after downwardly revised gains in the prior 2 months. So all that said, we have NASDAQ futures up 0.4%. Same for S&P futures. Dow futures up 0.3%. We have the 2-year yield, 4.74%, down 7 basis points. The 10-year yield at 4.37%. That's down 7 basis points. Over to earnings, luxury fashion house Burberry Group down 4% in London. It reported a slump in sales, weak demand in China and the U.S. Tomorrow we get a look into, not so luxury retail, Walmart. Yeah, Walmart shares, though, right now ahead of it are little change. Today, the focus of shifts. We have tech with Cisco Systems. That's reporting after the close. Cisco shares up nearly 0.5% right now. And finally, news from Netflix extending its push into sports. Sources saying finalizing a deal to acquire exclusive rights to stream 2 NFL games on Christmas Day. The company reportedly paying less than $150 million per game. Shares up 1%. That is your Bloomberg Business.
That's un-American. Come on, Christmas Day.
I know.
But the key thing is, here's the streaming companies getting into big ticket sports. We haven't seen it yet. This is just the beginning.
What are the Detroit Lions worth Thanksgiving Day?
A lot.
A lot is the answer.
Exactly.
And they actually won a few games last year.
I know. Yeah, they're set up for another good year.
Okay, here's the key question. We're going to cut to the chase here. Futures up 24. Gina Martin Adams nailed the earnings season. There's no other way to put it. She hit the ball out of the park,
I remember when
over the wall, over the Caskin flag, and the turnpike. The ball's down in Kenmore Square where McKee's eating lobster. Gina, I saw Google yesterday make people happy. Gene Munster wrote a big note. Out on YouTube live chat, they're talking up NVIDIA May 22nd. How do those big tech enthusiasms, if they occur, how does that affect the broader market?
Mostly it affects the broader market because these companies are spending so much money. Not only are they beating expectations, which is helping to buoy confidence in the outlook, but they're announcing tremendous amount of capital spending, which impacts the rest of the S&P 500 earnings stream, which I think is really important. They're also announcing a tremendous amount of give back of capital to shareholders. So we're looking at buyback yield for the Mag 7 that's now 10%.
Wow.
10%. That's an incredible number.
Yep.
And so the result of that is there's a lot of capital being deployed by these companies, whether it be back to shareholders or in general to sustain spending. And their investment is great for the rest of the index.
So a lot to talk about on earnings, but let's just get to the topic of the day with some of this macroeconomic data, the CPI data, the retail sales data came out. One could argue good on the CPI in terms of reduced inflation, maybe not so good on the retail sales. You put it all together, what do you think it means for the Fed?
Yeah.
And then maybe how that might impact markets?
I think it means nothing for the Fed short term. I mean, I think that people are overreacting to this month-over-month retail sales number. It's kind of stunning to me because when you look at the year-over-year pace of retail sales, it's 3%. That's right in line with the average that we've been at for the last several months through the second half of 23 to today. The low point on retail sales was in January. I just don't think that we can attribute a ton to the single data point. And frankly, when I was an economist, we spent a lot of time sort of toggling around about March and April retail sales because of the Easter holiday and how much it moves back and forth. So it's just kind of meaningless.
Somebody had a report yesterday that they're working a 53-week year. I mean, it's a crazy time. I mean, in terms of seasons and quarterly.
Yeah, and it just doesn't. That's why I look at the year-over-year numbers, because year-over-year on a smoothed basis, there's not been a huge change in retail sales, and I think that that's what's really important. On all, CPI came in bang on expectation. If I'm worried about anything, I'm worried about what's happening in PPI, and that we got yesterday.
Yep.
There is this sort of incremental, sort of creeping inflation happening earlier in the chain in import prices and PPI that could be problematic for margins when it comes to the second half of 2024 and into 2025. So that's what I'm looking at. But I don't think from the perspective of the Fed, anything today really changes the decision process.
All right, give us your view of kind of what we've seen from this earnings cycle. We're pretty much done. We'll get a nice big retailer tomorrow with Walmart. But what have we seen so far this cycle?
Yeah, so big takeaway for us was the analyst community is still too bearish. I mean, we talked about this coming into the season, but when you exclude the impact of the big healthcare accounting charges, which hopefully we're coming to the end of that mess, but nonetheless, when you exclude the impact of that, you're looking at double-digit earnings growth for the S&P.
Wow.
And remember, coming into the season, the analyst community was expecting only 3. They have also moderated their forecast for earnings growth going through the rest of this year. So they're saying, hey, yes, it was better than expected in the first quarter, but we can't expect that to continue. That sets us up for persistent beats if companies can continue to come in and beat expectations. The only component of the earnings outlook that I am worried about, again, is related to margins. Operating margins are still not rising to the degree that you would like to see, given that we are in the early recovery stage of the cycle.
Why is that, do you think?
I think some of it is the sticky price aspect. I think that you're seeing that for tech, you're seeing it for the companies that could cut costs and cut employment. But outside of those segments, you're looking at operating margins for the rest of the index. We're just not getting off the ground as fast as I would like.
Gina Martin Adams, after Ed Yardeni and Bikram Chadha of Deutsche Bank, this is a good and beautiful equity day, to say the least. I'm going to go to your technical work on a semi-log axis, and let's just take Ibitsin or the S&P 500, whatever. But the answer is legs of a bull market.
Yes.
So you studied, I lived it. You're way too young to remember this. 1975, up we go. We ended churn distribution, Luis Yamada distribution, and up we go, a second leg of a bull market. Are we second leg-ish now, or are we actually heading to a third leg, a more extended duration of a bull market?
I think we just popped out. We had the second leg emerge after the 10% correction that we had in 2023.
Yep.
We may be moving into more of a sideways sort of chop where we have really just more absorption of the gains that we've had, and a shift in leadership has a lot of potential to create rocky conditions for the equity market. But we should, in theory, move into a third leg. If the longer-term cycle is correct, if our read of the longer-term cycle is correct, we should move into a third leg up after this period of chop.
What's that based on? I mean, Paul and I, third leg of the bull market, we're cashing out. But wait, I'm in the triple leveraged all cash fund as it is. But what's the character of a third leg of a bull
That's
market?
usually the longest. It's the longest leg of the bull market. If you subscribe to Elliott wave theories of longer-term bull markets, for example, You had the first leg higher, you have the second leg, the third leg should be the longest and strongest leg higher, but we'll see. This is also pretty short term. I mean, if you think longer term, you would technically potentially argue that we've been in a bull market since 2009's lows, and 2020 didn't even really test that bull market.
If we book Contra
sort of
Chief,
phase.
will you come on?
Sure, let's do it. I'm
we'll
ready.
Come on. Vasily
I'm ready.
Contra-Chief. Gina Martin Adams, thank you so much. Contra-Chief led to Elliott wave theory, which was lectured to me at the dining room table. It was a difficult childhood. Gina Martin Adams, thank you so much. Futures up 28 with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, and Lisa. A competitive Senate race is set in Maryland. Democratic County Executive Angela Alsobrooks will face Republican former Governor Larry Hogan after she defeated wealthy Congressman David Trone in yesterday's primary. Alsobrooks beat Trone 54 to 41%. Hogan got 62% of the GOP primary vote. Bloomberg Government's Jonathan Tamari.
It means she'll have to go the more traditional route of fundraising, and yeah, every dollar that gets donated to that Maryland race are dollars that might potentially go to another race elsewhere in the country. But I'm sure that she will have sufficient money for that race. Democrats know they can't afford to lose Maryland. But yes, it could be tougher on the financial front, but the fact that she defeated David Trone despite all his money speaks probably to candidate quality there, and probably speaks to the fact that she's got a stronger candidacy or a stronger message than Trone would have had.
Government's John Tamari in Washington. The Biden administration has informed Congress of $1 billion weapons transfer to Israel. That's after President Biden paused a bomb shipment last week to head off a full-scale attack on Rafah. Now, as fighting against Hamas rages across Gaza, former CIA Director David Petraeus says Israel should shift tactics.
You have to clear and hold and keep the enemy out of the people. And I do believe, by the way, that Hamas is the equivalent of the Islamic State. This is an irreconcilable extremist group that I believe does need to be destroyed. But how you do that matters a great deal.
Retired General David Petraeus spoke with the Bloomberg News editor-in-chief, John Micklethwaite, at the Qatar Economic Forum in Doha. Ukrainian forces have withdrawn from some areas of the country's northeast and were battling Russian troops in others. Meanwhile, President Volodymyr Zelensky postponed all of his upcoming foreign trips. U.S. Secretary of State Antony Blinken sought to reassure the ally of continuing American support, announcing a $2 billion arms deal today. Global news, 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Did you see in Kyiv, the Secretary of State, and Michael Barr just having the Secretary of State there?
Yep.
Secretary of State rocking in the free world.
I saw that.
Neil Young.
Yep.
Had like an ES-335 thing going. He's like the real deal. I mean, there's a whole music side to the Secretary of State. Has an album out.
Does he?
And do you know who has a fabulous album out? You ready?
Yeah.
Richard Clarida.
Really?
Has a superb album, and one of the songs, I'm sorry, Vice Chairman, I can't remember it right now, but he has one song that is just magical. I mean, that's the way you make it.
What style of music is he?
It's like singer-songwriter. It's like, these are guys, I mean, Blinken's got a huge studio. I mean, Clarida's got, I think he's got a Neve 5088 in there. He's like large. He's up in Connecticut.
Good.
Doing a thing.
Multi-talented.
The Secretary of State rocking out in Kyiv. That was pretty good. Futures up 27. Please stay with us. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen with NASDAQ and S&P futures up 0.4%, Dow futures up 0.3%. We'll take it over to the bond market. The 2-year yield at 4.74%, down 6 basis points. The 10-year yield at 4.37%, and that's down 7 basis points. Quick check of commodities. We have spot gold higher at $2,370 an ounce. Brent crude $82 a barrel. NYMEX crude at $77 a barrel. And companies making news, that's Boeing, could be headed for possible criminal prosecution. Their shares down 0.3%. The DOJ said the company violated a deferred prosecution agreement related to the crashes of those 2 737 MAX airplanes. And we have New York Community Bank Corp up 4%. It's agreed to sell about $5 billion of loans to JP Morgan Chase. And the meme stock craze, well, it seems to be cooling down right now. We have GameStop down 12%. We have AMC down 10%. But the stocks, they're on track for their biggest monthly gain since the first half of 2021. That is your Bloomberg Business Flash. Tom and Paul.
It's a futures market. We're not open yet. We'll have to see what happens here. But 49 indicating 42. Paul, we had to get our surveillance meme correspondent to bring him in. He's so in demand by the media. It took us days to get him in. You know, why don't you bring in our victim?
I mean, he became a star along with his other meme stocks back in the day.
Like he walks down the street. The kids, they got their laptops out trying to make a trade after they talk to him.
Right, the pride of Syracuse. Bailey Lipschultz, markets reporter for Bloomberg News. What's going on? Are we back? I kind of understood the meme stock phenomena of 2021. People locked down in basements, stimulus money, trading stocks to have fun.
Yeah.
What's driving it today, do you think?
Well, so today we're excluding today, looking at the last 2 days. I wrote a story yesterday about how the fingerprints of momentum quants are kind of all over this. And when I look at the retail flows on platforms like Fidelity's and Interactive Brokers, more sell orders of GameStop than to buy. Like investors who bought the stock over the last 3 years and held on to the shares, there's selling pressure there. That didn't exist back in 2021 when short interest was 140%. Now it's closer to 25%. So the dynamics are very different now than they were back in 2021.
What did Hello Kitty do?
Roaring Kitty.
Oh, sorry. My fault. Bailey, you come out at 10 o'clock. They know what you're talking about. I have no clue. What did Hello Kitty do?
The Roaring Kitty X account posted a meme on Sunday night, which essentially, reading between the lines and looking at what the meme stands for, is essentially getting locked into a game. So the picture was a character or a drawing leaning back and pushing forward to leaning forward. That jump-started, sent the markets roaring.
We tear apart short sellers out touting their shorts. They're un-American. They're illegal. Why is this any different going along than the short sellers getting beat up?
Not really. I mean, that's kind of the thing, Tom. When you look at the different arguments around different stocks, everyone has their own case to be made. So the fact that a person on Twitter seemingly is posting memes nonstop and stitched together videos and the stock reacts.
Neil Young's next song, Memeing in a Free World.
Bailey, so again, let's go back to who's buying this stuff. If it isn't, the kid in his basement with his computer, do we get a sense of who's buying? Because I saw some real volume trade over the past few days, tens of millions of shares.
Yeah, when I talk to people who advise hedge funds, they say that the blueprint and kind of the playbook was laid out in 2021, that some of those momentum quants who trade strictly based on trading volumes and momentum are getting in and out of the stock. That's why you're seeing so much money being traded. Because again, when I look at Fidelity data, for example, back in 2021, buy orders were outstripping those to sell like at a 30-to-1 clip.
Wow.
There are more sells than buys right now on those platforms.
So it's different.
So it's very different.
Right. I got two questions. First one's technical. For those fancy hedge fund people, what is the setup that they're using to take $50 a share? Doesn't matter the stock. Are they going long to 51? Are they looking for 52? Are they trading in pennies, decimals?
I think everyone has their own different strategy.
Fair.
And so I think for the most part, the idea is, and it sounds super elementary, buying begets buying. So you buy the stock and then see the next momentum fund buys the stock. So then you already have plugged into your algorithm. You buy it, for your example, at 50, and then you take in that profit at 52. But if you have your computers reading that the stock's going to keep going, then you wait for a sell signal then to get out. So they're buying early and selling early.
Bill Gross, we published today that my good friend Bill Gross is out. And I'm going to explain this slowly, folks. He's doing options where he's writing them out, taking in a premium, looking at the idiot volatility and hoping that the stock will go down. Did I do that okay? Was that like...
For the most part, he's hoping that the stock trades flat.
Okay.
So he's doing that for both GameStop and AMC. He did it for Trump Media. It's really when I was talking to him through one of his PR people, basically saying the expectation is that there's enough money that you can take both sides of the trade as long as it doesn't plunge or absolutely rip again. He's just taking cash.
He's just taking in the premium while the children play.
Exactly.
Okay.
So, all right, that's enough for the meme stocks. Your other beat is IPOs. We heard from some CEOs this week from around the world speaking that they're pretty optimistic that the IPO market this year is better, and they expect it to remain pretty solid. Tell us about the IPO market this year. What have we seen so far? How's the volume? How's business? And then what's the outlook?
Everything has to be better when you're coming off the worst year in more than 12 years. So we've seen volumes, for the most part, taking up. The comps actually got a little bit more difficult because this time last year, J&J's Kenvue carve-out happened. That priced a few $1 billion in paper. But we've seen 3 deals greater than $1 billion. Viking Holdings, luxury cruise line, has done quite well, up 17% from offer price. Amer Sports, which was hotly debated, up about 16% from that price. And then Kaspi, which is a Kazakhstan app.
Oh boy.
A lot of debate around that. But we've seen Reddit and Rubrik and UL Solutions, who does safety testing, a number of kind of companies coming to market and for the most part being well received. And we've seen a number of companies considering whether they want to go now or wait until after.
Are we back to where profits or EBITDA were blind to that? They're just looking at growth?
No, so far removed from that. And that's the big issue when you talk to venture capitalists, is that they have a lot of companies that they need to get out of and start to return money to their LPs, and the market's not ready for that.
Who decides the next meme stock? Who chooses? I mean, I looked at like 15 names, and there's no correlation, Paul, that I can see. I mean, is Peloton in there?
Well, this is where the existential debate of a meme stock comes back. Like AMC and GameStop, Bed Bath & Beyond back in the day, I think were true meme stocks, heavily shorted companies that were rallying just because people posted actual memes on the internet. Bed Bath & Beyond, Robinhood, some of those are heavily shorted names that are just getting your typical short squeeze and maybe a gamma squeeze if people are flipping out of the money call options, but it's not what I would classify as
See the difference here? If I say gamma squeeze, they put me in the surveillance penalty box.
Yep.
Bailey trots it out like it's the King's English.
The markets guy. All right, so what's next here on your beat? Because I'm thinking spin-offs, IPOs, SPACs. I mean, what's the next big thing?
I think more and more conversations are centering around spin-outs and carve-outs. A number of public companies considering IPOing particular units. We saw, and we have seen recently, and continuing over the last few years, investors wanting skinnier companies and more focused stories. So we saw that with J&J Kenvue. We saw that with a number of companies, Kellogg creating Kellanova and WK Kellogg. So breakups are back in vogue, and that's one of the things we've been watching when we talk to ECM bankers.
Oh, so then I get it. He's migrating from our meme reporter over to our matrimonial reporter.
That's right.
Did you see Rory?
Yes.
I know.
Too bad.
Bailey Lipschultz will have that for you, the breakups reporter for Bloomberg. I learned a lot, seriously. Yep. It's great. I don't get it. Yep. I just totally don't get it. Bailey, thank you in the King's English. You really appreciate that. Paul, I've been looking here. While Bailey's going on about GameStop,
I know.
I'm looking at Anaconda Copper. And, I'm sorry, 40,000 is a big deal on the Dow. It's a leg up, off the Yardeni gloom. Are you ready? 28,000 is where Yardeni said shut up and buy.
Yep. And he's still talking some big numbers about, the S&P 6,000, and the year after that 6,500. So still bullish on the market, and he's been right. Gina Martin Adams has been right, and she's been telling us to focus on earnings, and she's been above consensus in her earnings call relative to the street, and they've been right so far.
10-year yield, 4.36% and a solid 8 basis points. Tepid retail sales. From New York City on YouTube, subscribe to Bloomberg Podcasts. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. So how will the markets react after a measure of underlying U.S. inflation? It cooled in April for the first time in 6 months. Talking about the core consumer price index increased 0.3% from March from a year ago. It advanced 3.6%. U.S. retail sales, well, they stalled in April. So let's see how things are shaping up if we start to get the numbers in. And we are on records watch, so we're going to be deeping a little bit, taking a deeper dive. The S&P 500 up 0.4% at 5,268. The record to beat 5,254. The Dow up 0.4% as well at 39,724. That record at 39,807. And the Nasdaq up 0.5% at 16,603. That record to beat at 16,511. Over to the bond market. The 2-year yield at 4.75%. That's down about 6 basis points. The 10-year yield at 4.37%, and that's down about 6 basis points as well. At the open, we have to check in with the meme stock gain craze. Okay, so So GameStop now down 19%, AMC down 11%. That is your Bloomberg opening bell report. Tom and Paul.
I put that big order in yesterday. It's 357 to close. It was a market order.
Yep.
Live YouTube, thank you so much. Good morning to all of you in Jamaica, one of my favorite places. They say, come on down. Paul, I don't even know when we go. I'm thinking like March or April. Strawberry Hill is to die for outside Kingston.
Sign me up.
Round Hill's way out on the other end, Montego Bay and all that. But it's good morning, Jamaica. We would love to do something in Strawberry. It's just like it's near the coffee places.
Mm-hmm.
You can only get the coffee if you go there. It's like really hard to get. Good morning, Jamaica. Thank you for listening down in the best island in the Caribbean. Dow up 191 points. We're on a Sweeney watch, 39,746 on there. Omar Aguilar with us right now with Schwab Asset Management, just to synthesize everything we've seen. What are you going to write today, Omar, after this economic report? How do you synthesize it into our confidence to own equities?
Hey, good morning, Paul, Tom. It's interesting because, all this information we got, especially with yesterday PPI and today's CPI, focusing on the Fed's, favorite number they use, which is PCE, and everything seems to be going towards the fact that the Fed will, have more information so that they can prepare for the rate cuts. So overall, the synthesis and the summary is that the economy seems to be now, adjusting to higher interest rates and therefore slowing down. And you can see with the retail sales also going on the downturn that the difficulty of inflation seems to get going on the Fed side. And therefore, it is just finding the data that will give you this first support so that they can actually make the first move to a cut. And it seems like the market is pricing in already even earlier than expected Fed cut, probably before the summer starts.
Well, Omar, it's interesting. The market has performed, if you think about the S&P 500, up about 10% year to date, and that's despite the fact, or with the headwinds of a market adjusting to, I guess, less bullish Fed speak. We started the year at 6 cuts priced into the market. Now we're down to 1 or 2 or something like that. Yet, despite those headwinds, stocks have worked.
Yeah, well, it's sort of consistent with these. We have been on the camp of these rolling recessions followed by these rolling recoveries. And, what we saw is, market, having that very healthy rotation early in the first quarter, that is basically propelling the rally that we had in last year, actually 2022 and 2023, that was very concentrated in a few stocks. And then when you started seeing just, what has transpired in the last couple of months, that is consistent with, investors looking at earnings, looking at margins, and looking at expansion of multiples that are sort of the support of what we see in the markets now. On top of that, we saw that this resurgence of buybacks that also has put a very solid support into equities that you can actually see for the results that we have seen so far. Now, of course, having the Fed, going from 6, rate cuts to now 1 or 2 for the year clearly was not the helpful situation and provided a headwind. But so far, earnings seem to be supported more than, what the Fed might do.
Paul, Dow up 206 points, outpacing futures here that we've seen over the last hour. Dow 39,777, SPX 5276.
Omar, you mentioned earnings here. We're pretty much finished up with earnings, although we're going to hear from an important retailer tomorrow with Walmart. What are your takeaways from this earnings period? Enough to support this market?
Well, earnings seem to be, really good to us. Overall, we see a significant amount of earnings beats. I think what it was interesting this quarter was the fact that, the reaction towards earnings beats was probably less exciting as it normally is. But, the results of any companies that ended up beating their revenue estimates were actually much, much positive. So it seemed like, the investors seem to be focusing more about, what would be the future revenue and the outlook on these companies going forward, less than just the pure earnings beat. And on top of that, you see the fact that, we've seen a significant amount of increase in capital expenditure, mostly related to technology. And when you combine CapEx with, free cash flow generation, those combinations seem to be putting a significant support on companies that do that.
Bitcoin up almost 3,000, 64,000, I'll round it up, 64,500. Omar, your shop, Schwab Asset Management, on the efficacy of owning Bitcoin. Discuss.
Yeah, well, we have discussed this with our clients overall, and there's two components of Bitcoin. Bitcoin overall is still, a heavily supply and demand driven, asset class. And what that means is that it's clearly, an area that does not have yet the fundamental economic or, value creation to be able to put a fair value price. So when we think about the advice that we normally provide to our customers, we tend to say like, well, you have to figure out what is your asset allocation relative to the fair valuation that you assign to each one of those asset classes. And Bitcoin right now seems to be just mostly driven by a momentum driven or just simply price supply demand, setup, which is not quite what we put into a strategic asset allocation. Clearly and available for trading and available for being able to have short-term, gains. But overall, when you think about the long-term perspective that most of our clients look for, that's still not, a fit within our asset allocation.
Well, within your asset allocation, Omar, give us a sense. What's your fixed income call here today? Because an investor can go buy a 2-year Treasury and get 4.75%, or maybe get something better than that if you want to take some credit risk here. How do you think about fixed income here?
Yeah, well, we've been doing a lot of work in fixed income last say year, and a lot of that is related to the fact that for the first time in a long time, we basically had excitement on fixed income. Never thought we were going to say that volatility in yields was going to be that exciting, but clearly a lot has happened. Our all advice continues to be that we expect the Fed to reduce rates, and therefore the shape of the yield curve is going to change, and therefore this is a great opportunity for start increasing maturity in a high quality intermediate area, which you actually still need to be consistent of. You don't have to take credit risk given where the spreads are, and therefore increasing duration at this time to reduce the reinvestment risk when you can lock in attractive yields that we have is still in that intermediate world seems to be the right place to be.
Omar, backstory today, and I guess it goes to the proverbial cab drivers not talking to me about NVIDIA, but what's changed across years in my career is that we used to always have brokers helping us out in that, and then Charles Schwab, the man, Ned Johnson over at Fidelity and others revolutionized the business. Is our exuberance different now because we don't have brokers as much telling us what to do?
Well, I think what we have seen, clearly, over the last 40 years, obviously, is the fact that we have created the environment of being able to provide access, being able to reduce the cost for being an investor, and that has been great for the society and has been great for markets, has been great in general. And I think when you think about the last, say 5 years, what we have observed is the growth on areas where you have more investors being engaged in the market, which is a good sign. It's a good thing. You normally, in the long back the years, it was only selected group of people that were engaged because of what you described. You only need to have certain relationship with certain brokers, and you need to have certain amount of wealth to be able to access the market. Today, you can actually do it yourself. You can actually go to like a technology-driven advice to be able to still, have access to areas that you probably never had before. And on top of that, we have a lot of access to data. You can actually have access to markets through your mobile phone. You can have access to market through the web. And that in itself is actually pretty good in terms of liquidity for the market, but also just overall education for future generations on the benefits of investing.
Omar, thank you so much. Omar Aguilar with us with Charles Schwab. Greatly appreciate it today. Paul, I'm using the fancy Bloomberg thing here. I'm going from the Yardeni low. It's back when the Detroit Lions were winning. And I'm sorry, we're up 49% from October 2022, 29% per year. That's the Standard & Poor's 500.
Yep.
29% per year off the fearedness we felt in late October 2022.
Yeah, it's. I guess that's the Fed pivot. Pivoting perhaps towards lower rates. But boy, what a move!
It's amazing.
There,
It's the last time the Tigers won 3 in a row. With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Joe Biden says he will not participate in the campaign debate sponsored by a nonpartisan commission. Instead, challenging Republican Donald Trump to a pair of debates in June and September. Biden released an online video on his X account, formerly Twitter.
Donald Trump lost 2 debates to me in 2020. And since then, he hadn't shown up for debate. Now he's acting like he wants to debate me again. Well, make my day, pal. I'll even do it twice. So let's pick the dates, Donald. I hear you're free on Wednesdays.
The free on Wednesdays comment was a dig at Trump's ongoing hush money trial by noting that it's Trump's usual day off in the trial. Trump tells Fox News Biden's proposed dates are fully acceptable to him. Secretary of State Antony Blinken is continuing his visit to Ukraine today, as he seeks to reassure Kyiv of the United States' support. The secretary today has been meeting with Ukraine's foreign minister. Ukrainian leaders have been pressing for more air defenses, in particular Patriot systems. Blinken announced a $2 billion arms deal today. Most of the money comes from a package approved last month. More electrical issues plague the ship that hit the Francis Scott Key Bridge in Baltimore than previously known. More from Bloomberg's Dan Schwartzman.
Investigators looking into the Baltimore bridge collapse say in a preliminary report that the cargo ship MV Dolly had suffered an electrical blackout around 10 hours before leaving the port of Baltimore. That power outage, though, was caused by a crew member's error. The Dolly would go on to lose power again and run into the Francis Scott Key Bridge, killing 6 members of a roadwork crew. The report says that around a half-mile from the bridge, the Dolly lost power again when an electrical breaker tripped. After power was restored, the ship suffered a third power outage before hitting the bridge. A full investigation is expected to take a year or longer. Dan Schwartzman, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
On a Dow 40,000 watch, in futures, we just went out to a new high. SPX with a record high trading. That was about 10 minutes ago. SPX 5276 right now, up 30 points, up 0.6%. Standard & Poor's 500 leading the way today. Paul, when was the last time we saw, as Gina Martin Adams said, a third leg of a bull market?
Yeah, I know.
We were younger.
I think so. And you know what really got my attention today for that comment about a third leg is that tends to be the longest move in a market move. So if that in fact does happen, we'll have to see how it plays out. But again, just huge moves in these markets.
On live chat on YouTube today, we've had some spirited conversations. Leading the way, Denny McClain. Michael Barr mentioned Denny McClain, and that got a huge response. Explain to our audience of Ute who Mr. McClain is.
He was a star pitcher for the Detroit Tigers. He was part of that 1968 World Series champion Detroit Tigers. It was just a pitcher that could, just blow the lights out.
And he did innings. They didn't take, there was no pitch count.
Yeah.
My God, 70 pitches. Put them aside. None of that, right.
Yeah. High kick out, too.
Very good.
Yeah.
There, we had to review that, folks, just to keep Michael Barr happy. Dow up 212 points. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks advancing, bond yields falling as we start to move into midweek trading. This is a slowdown. Inflation kind of reinforced bets that the Federal Reserve will cut rates this year. So looking over at the indexes right now, the S&P 500, Dow, Nasdaq, all up 0.5%. But if you look a little bit deeper, the S&P 500 at 5,274, up 27 points. The Dow up 39,749, up 191 points. And the Nasdaq up 16,593. 81 points. All right, moving on to the bond market. The 2-year yield at 4.75%. That's down 6 basis points. The 10-year yield at 4.37%, and that's down 7 basis points. Quick check of commodities. We have spot gold higher at 2,362 an ounce. Copper surged to a fresh record in New York. And we have oil, Brent crude, $81 a barrel. WTI crude, $76 a barrel. I want to point out Boeing, they're down 1% right now after news that it could be headed for possible criminal prosecution. And then we have New York Community Bank Corp. They're down about 0.1% right now. It's agreed to sell about $5 billion of loans to JP Morgan Chase. And finally, luxury fashion house Burberry Group, their ADRs, they're down about 5%. Reported slowdown in sales. Tomorrow we get results from Walmart, but before that, Cisco System reports after the market closed today. That is your Bloomberg Business Flash. Tom and Paul.
Thank you so much.
Tom, did you know that Boeing is down 32% this year? I mean, the black cloud over this company is something like I've never seen.
It's just sport. Here's the reality, folks. The kids, when they're smart, they go get engineering degrees. I was involved in this as well. Mine was this immense privilege of Boulder, Colorado, and aerospace engineering from years ago. And the family goes back, and there's like land-grant schools. But ground zero and my family was involved in this well over 100 years ago, was New York City and Boston engineering. A lot of people don't know this.
No. Yep.
And one of the cool places was Cooper Union, which nobody ever talks about. It's a place where you go get brunch and an overpriced coffee. But Cooper Union, going back to the Civil War, owns the high ground in traditional engineering. He was weaned there. Joining us now from Citigroup, John Chirico of Cooper Union and Columbia Mechanical Engineering. What was the first day like at Cooper Union? You're there, you're scared out of your mind, just like I was. Did you have a slide rule?
I had a slide rule.
You had a Kufel and Esser slide rule.
I did.
And
I was that generation that was just turning over to calculators.
The rich kids had the Hewlett and Packard.
And all the old engineers were making fun of us.
What was the first day like at Cooper Union with all that heritage?
It was amazing. So I drove my family crazy all over the country where I would go to college, and then I took the train down to Manhattan and went to Cooper Union. But outstanding institution,
right.
Tremendous history, and art, architecture, and engineering.
Yeah.
So at every moment, it was diversity of thought.
It's like ground zero. Yeah. It's just great. What's the Newtonian mechanics right now of your world with private equity and private debt reigning supreme? How many times a day are you talking to Jane Fraser?
We talk regularly. Banking is a great focus of hers. And as you know, at Citi, we are a multinational corporations solution provider. And so we tend to be very focused on what's global, what's happening, where growth is going to occur. I would say, coming off a very difficult 22 and 23, 24 is really feeling like since the fourth quarter of 23, like we're seeing risk come back on from an investor perspective, but also boardrooms beginning to focus on offense and not just defense.
I mean, I started early in my career at Salomon Brothers and transformed into what is now this monster Citi platform. So what are your clients coming to you guys, or what are you pitching these days? Are you pitching advice? Let's get out there. It's time to start going buying some stuff. Is it time to refigure your balance sheet? What are some of the common calls that you and your team and bankers are making these days?
Well, first, we don't pitch.
I made a lot of pitch books in my day.
But we do have pitch books.
Okay.
No, but the truth is that I think 22 and 23 were very focused on defense, what could go wrong. We have to realize we've been dealing with inflation for a long time, even coming out of the pandemic, as costs began to rise for different reasons. So companies have been very focused on belt tightening. It was one of the reasons why we felt like if there were a recession, it would be a soft landing, and it would be particularly for corporates reasonably mild because it wasn't a surprise. We were dealing with it for a while. I would say from 4th of July last year, a lot more activity on why don't you guys come in and give us a landscape? What should we be thinking about? Where should we be focused? It was early, but those are the transactions that you began to see, some in the fourth quarter, a lot in the first quarter, and we have more in the pipeline ready to come.
How about the M&A environment these days? When I think about M&A, I think I have to have a sense of confidence in the future if I'm a board member, if I'm a CEO, to really engage in that type of activity. What are your discussions on M&A these days?
Yeah, I think that's what was lacking for a very long time. And I think it was the ambiguity that lasted for so long that it was a bit like boiling the frog. I think boardrooms began to feel like, I'm not sure we're ever going to get the certainty we want. And there are opportunities out there. So there was a lot of focus on expense reductions in 22 and 23. But I think investors, rightfully so, are looking at organic growth and what can we do to boost revenues. And so whether that's direct investment in many cases or M&A, it's back on the docket.
I got to ask you, outside your remit, you're doing more of the U.S. and all that. I think of Anita McVeigh and what you're doing in ESG and all that. And all of a sudden on this show, it's like a time warp. We're all back to talking about railways to India like Mary Poppins and materials. We got copper moments ago, a red sticky with a record high. This is your guys' wheelhouse.
Yes.
What does Citigroup do to compete with I don't want you to talk BHP Anglo-American if you're involved, but what do you do to train the youth to remember materials as a place banking goes with Citigroup?
Absolutely. I think infrastructure and materials slightly different, but overall and logistics.
It's real.
It's very real. And even the highest tech companies, what we're finding is when they run into difficulty, it's on the operational logistics side of things. And how do they think about not only having a great product, but how do I deliver it? And the world, we have a lot of great digital companies. There's a lot of digital analog companies, right? When you think of Uber as one of the tremendous digital analog companies where you're physically moving things. And logistics, infrastructure play a key role. So even in the highest end of tech, it's there. But in the more traditional area, it's fundamental. Materials, when we think about battery technologies moving forward and the like, and a lot of our ESG focus, there's a tremendous resurgence in metals and mining. I have to say, early, if you go back 5 years ago, it wasn't the area where you had all the incoming MBAs saying, I want to go into metals and mining. I think what they're realizing is there's a tremendous future there and one they could feel good about pursuing.
You know, John, I was just up in Boston last week meeting with the good folks at Boston Consulting Group, and they were telling me that their CEO clients, to a person, want to get smart on AI.
Yeah.
And how do I invest? Where do I invest? How do I invest ethically? So on and so forth. How is Citi approaching that business topic?
Yeah, multiple dimensions. I think there's a tremendous interest in what AI could do for Citi. And when you think about cost and productivity improvements, tremendous. I think initially everybody focused on it like it was a product, and so we focus on the product company. So OpenAI, tremendous. What is Amazon doing? What is Google doing? I think we've moved beyond that now, and investors are really focused on what is this wave going to do, and how does it drive consumer companies, healthcare companies, in the way that they move forward. And we're all learning as we go. But that's where I see the change.
I got 28 seconds. I mean, you got merched out here on Nick's paraphernalia. Are your seats better than Sweeney's seats?
I'm not sure. I don't have seats. Citi's got great seats for our clients, but we're very excited. It's been 30 years and really 50 since we got a championship, but we love this team. They're the heart and soul of New York.
John Chirico, thank you so much.
Thank you.
Sweeney at the next game, no doubt. You look for him. He's like 3 rows above, all the celebs and all that. Sweeney's great.
I love the pin, though. Yeah.
John Chirico,
People are
head
fired
of
up about this Knick team. Because it's not a bunch of blue-collar guys. You got one quasi-star, and they're just bringing it, and they're hurt. Everybody's
I'm loving it.
Yeah. You love the Rangers, though, I know.
Yeah, we look at the Ram, and I'm a Canadians fan, but we look at that as well. John Chirico, thank you so much. Head of banking at Citigroup. They're on all sorts of the materials thing I'm fascinated by. Major shout out. What's really interesting, folks, is the way we do this. Seriously, we never talk to each other. Michael Barr, never talking to him. Paul Sweeney, never talking to him. John Tucker, we never talked to John Tucker. And Barr killed it yesterday, mentioning Bob James with the great David Sanborn, who we lost this week. This is Touchdown, an album that turned us around, the taxi theme and all that. David Sanborn helping Bob James.